Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. I do wish and hope that you guys are attempting your September 25 examination in a very great manner. So now, for the purpose of this paper 3 for the taxation paper, we thought of creating one more valuable resource for you all. So where we have identified a few exceptional topics where there will be a compulsory question and which will cover a significant weightage in our question paper. So we have identified few such topics where we are going to do in this session a comprehensive coverage of all that concepts for a span of around 2 to 3 hours, somewhere around that it will take the time. So in GST, I have identified few such topics where if we are thorough with this concepts, whatever I have identified it here, definitely we can easily score somewhere around 20 marks, 15 to 20 marks. We can easily score it, and that too within a very short span of time, spanning around some 2 to 3 hours, somewhere in between. So if we could spend that 2 to 3 hours of time and if we are able to fetch somewhere around 20 marks in the GST paper, that is going to be a very big thing. That is definitely a lot of value addition in your preparation. So to help you out with that value addition, we have identified a few topics, and these topics I will be covering comprehensively in a detailed manner in this 2 to 3 hours of time, where definitely this is going to add value for your preparation. Hope this video will help you out, guys. Please watch this video till the end so that you all will get comfortable with these exceptional topics and you can score very good marks in your examination. So having said that, let me try to take each and every topic. I have made a list of the topics here. So we'll try to go through these topics in a quick manner and get good marks in our paper. Right. So having said that, without wasting any of your time further, let me directly jump into the discussion. See, as we all are aware, once you look at the question paper, first you will be solving the MCQs part. So in the GST, whatever MCQs are there, that you will solve. Once you are done with the MCQ, you all know there will be one comprehensive question in the GST. There will be one comprehensive question in the GST where you will be asked to calculate the amount of output tax liability, and also they will ask you to calculate what is the amount of GST which will be payable in cash. Calculate the GST liability, or where they will give different scenarios covering multiple chapters. They will talk about various outward supplies, then they will talk about various inward supplies, and from that we need to determine what is taxable, what is not taxable, time of supply related provisions they will link, value of supply provisions they will link. So we'll have a comprehensive question where we are required to calculate our output tax liability, where we are required to calculate how much input tax credit we are eligible for. Then we have to do something called utilization of the input tax credit. Payment of taxes we are required to do. So we have so much of output tax liability under three heads: IGST, CGST, SGST. We will also have input tax credit under three heads: IGST, CGST, SGST. So how we can knock it off, and what is the total amount of GST which we are required to pay ultimately in cash? This is the most important part in that comprehensive question, which will give you a good amount of marks. So first we will start with that most important, since you will be solving that comprehensive question first. We will hit the first aspect, which is the manner of utilization of input tax credit. Very, very important. What is the manner in which input tax credit should be utilized? Very important from the examination perspective. First, we will start our discussion with that only. So I have here from the material. So here you have how can you utilize that input tax credit? What is the manner of utilization of input tax credit? We have given here in the material, but let me try to explain it in a detailed manner now. So always start this format, the whatever format I'm going to tell you, even try to present your answer in this format only. Even in our regular class also, we have done the same thing. So first you will calculate your output tax liability. Keep the columns in this manner. First IGST column, then CGST column, then SGST column. So you will determine what are the various outward taxable supplies, how much is output tax liability, all that you will determine, and total you will have how much amount of IGST payable, how much amount of SGST payable, how much amount of CGST payable. In the same manner, calculate the input tax rate also. Keep the columns the same. What amount of IGST input tax credit you have, what amount of CGST input tax credit you have, and what amount of SGST input tax credit you have. Try to calculate in this columnar manner. Now, the manner of utilization of input tax credit. Sir, how do we utilize the input tax credit? So first, start with output tax liability, CGST. Sorry, not CGST. First column should be IGST always. So IGST, CGST, and SGST. So this is, you will write the figures here. What is your output tax liability in each of the three headings? You will write it here. Then comes first, we have to, while using the input tax credit, First, you have to take the input tax credit of IGST. First, you have to take the input tax credit of IGST. And they say that input tax credit of IGST should be first used for IGST only. Whatever IGST input tax rate is there, first you have to use it for IGST output tax liability. Okay, so you will use it for IGST output tax liability. If everything gets exhausted, okay, well and good, proceed further. But after using that IGST, after using that ITC of IGST against the IGST output tax liability, if any balance is left out, that balance you can use it for CGST fully, or you can use it for SGST fully, or you can use it for CGST or SGST in whatever combination you want. Like if you want to use it 50-50, 60-40, 30-70, 10-20, in whatever manner you want to use it, you can use it. But the first thing, IGST, start with IGST input tax credit. First, utilize the IGST input tax credit against the IGST output tax liability. After that, if any excess balance is left out, that you can use it either for CGST, you can use it for completely SGST, or you can use it for SGST or CGST in any combination, in whatever manner you want to use it, that you can do it. So whatever it is, first try to exhaust the IGST balance completely. First try to exhaust the IGST balance completely. So once IGST balance has been exhausted, that to completely IGST balance has been exhausted, then the second one, you need to come to CGST input tax credit. So whatever input tax credit that you have under CGST heading, that must be first used for CGST. That must be used for CGST. After that, if any excess balance is left out, that you have to use it for IGST. So whatever it is, try to use the CGST input tax credit in this manner. Okay. Then comes the third aspect. Then you start with SGST input tax credit. And from that SGST input tax credit, first you have to use it for discharging the output tax liability of SGST. After that, if any excess balance is left out, then you can use it for discharging the IGST liability. That's all. This is what the manner of utilization of the input tax credit. So just to follow this order, even columns also like this only, you try to keep it in your examination also. So first start with IGST input tax credit, try to adjust it against the IGST output tax liability. After that, if any excess balance is left out, that you can use it in whatever combination you want. Then you come to CGST input tax credit. First, you have to use it for CGST. If any excess balance is left out, that you can use it for IGST. Then come to SGST. Whatever SGST input tax credit you have, that you try to adjust it with the SGST part. After that, if any excess balance is left out, that you can use it for IGST. And one most important point, CGST can't be used for SGST input tax credit, SGST can't be used for CGST input tax credit. Why? Because CGST will go to central government, SGST will go to state government. So that's why inter-usage of the CGST and SGST against each other is strictly prohibited. This thing you have to keep in mind. CGST can't be used for SGST, SGST can't be used for CGST. This cross utilization is not possible. Clear, everyone? So this is the manner of utilization of ITC. So this is very, very important. So one topic we have covered it. And one more point which I want the students to keep in mind when you are solving that comprehensive question. Please be careful about the GST rates. What is the rate of GST which they have prescribed in the question? Please be careful about it. Why? Because as a part of our practice, very often what we do is we do the calculation assuming the GST rate as 18%. So CGST 9, CGST, SGST 9, and if it is IGST 18. This is what by default we do the calculation. But please be careful. Sometimes in the question what they say is they mention different kinds of rates. So in some cases you might have input tax or output tax liability for goods also, for services also. Sometimes in the question they will say there are some goods which will attract only, goods attract 5% of GST, services attract 18% of GST. So then when you are calculating the output tax liability, please be careful whether you are making outward supply of the goods or you are making outward supply of the services. If you are making outward supply of the goods, calculate the GST output tax liability or input tax credit at the rate of 5%. And if you are making services, then calculate it at 18%. If they specifically mention that in the question. And sometimes they will tell you a question something like this. They will purchase some capital asset, capital goods, and they will say that on the capital good, the rate of GST is 28%. So you have to be very, very careful. By default, we are programmed as a part of our regular practice. By default, often mistake which students commit is when calculating the GST output tax liability and input tax credit, they go with the default rate of 18%. No, please read the question carefully, get the facts of the question carefully. Whether in case in the question they have mentioned separate rates of GST for goods, services or capital goods, calculate the GST part accordingly. Or else your answer will go wrong, you will lose the marks. And most importantly, see, sometimes in the question they will tell you what are the output tax. There will be some outward services which are exempted. Now what many students will do is that exempted list they will not include it in the table. That is one more blunder. So if at all any outward supply is made, against that there is no output tax liability, right? Just you will maintain that format. No, in that format give the description, keep it as blank in all the three and write the reason why that service is exempted. Similarly, when you are calculating the input tax liability on certain item, if input tax credit is not available, mention that item, but give the reason why input tax credit is blocked in respect of that asset or goods or service, whatever it is. Clear, everyone? So that you have to be very, very careful. And one more thing you have to keep in mind. One more thing when you are solving the comprehensive question, when you are determining your GST liability, which has to be paid in cash. If in the question, if they have told you any point on which RCM will become applicable, that RCM, the amount of GST which the recipient is required to pay tax under reverse charge mechanism, that liability, that RCM liability also should be added. Why? Because as we all are aware, the GST which is required to be paid under reverse charge mechanism must be paid in cash only. This is also one more mistake which many students will commit. So once you have calculated what is the amount of GST which is required to be paid in cash, to that, please be cautious. If in the given list, if in the given facts, if there is any goods or service on which a tax is required to be paid under reverse charge mechanism, that component, that RCM liability, you have to add it to the cash liability, because RCM liability should always be discharged in cash only. You can't use your input tax credit for that. Understood? So this is one first concept which I wanted to take you through thoroughly. So this we are done. This we have completed manner of utilization of input tax credit. Now I will pick up the next part, which is value of supply. So as we all are aware, even in the strategy video also I have told, without a question from the value of the supply chapter, there will not be a question in the exam. There will not be a question paper at all. So that's why it becomes very much necessary for us to know how to determine the value of supply. How to determine the value of supply, that we will have a quick overview of the chapter. Why? Because valuation is going to be very, very important. Either it will be linked in a comprehensive question, or you might find a dedicated question. Sometimes at both the places it might appear. So it becomes very much necessary for us to know what will be included in the value of supply. Now section number 15 of the CGST Act actually talks about how to determine the value of the supply. And 15 subsection 1, which says that if the transaction is happening between two unrelated persons, and price is the only consideration, money is the only consideration, there is no barter, there is no exchange. So when the transaction is happening between two unrelated persons and the price is sole consideration, then they say that the value will be transaction value. What do they say? Transaction value. Sir, what do you mean by transaction value? The amount paid or payable, the amount which has already been paid or yet to be paid for the purpose of making that supply to happen. So that value we call it as a transaction value. So when the transaction is taking place between two unrelated persons and when the price is the sole consideration, then the value of such supply will be considered as transaction value. Which section says that? 15 subsection 1 says that. Then we have 15 subsection 2, which says that to this transaction value, you should add some items. There are some additions which are required to be made for the purpose of determining value of supply, on which we will multiply the rate of GST for calculating the GST liability. First, we start with the transaction value, and 15 subsection 2 says that there are certain items which are required to be added to the transaction value to arrive at the value of supply. Then we have 15 subsection 3, which will say that there are some discounts which are required to be reduced. Not all discounts. There are certain discounts. They have given certain kind of discounts. Those discounts are to be reduced from the transaction value. So we will add some, we will make some additions. Sorry. So we'll make some additions as per 15 subsection 2. Then as per 15 subsection 3, there are certain discounts which if eligible, that we will reduce it from the transaction value. Then you get the resulting figure that will be considered as value of supply. That will be considered as value of supply, and on that value of supply, the rate of GST which is applicable for that respective supply has to be multiplied. From that you will arrive at the GST value. Now we need to understand, sir, what are those additions which you are required to make to the transaction value and what kind of discounts are eligible to be reduced from the transaction value. This we have to become very, very clear. So we will start with additions. What additions are required to be made to the value of supply? So under 15 subsection 2, we have various clauses, clause A, clause B, clause C, clause D, clause E. Like that, we have 5 clauses. Each clause will talk about certain additions which we are required to make. Okay, so let us do it. What are the additions which are required to be made to the value of supply? Very, very important discussion, guys. So I am telling you, this is such an easy topic from which there will be a compulsory question. Easily some 4 to 5 marks you can fetch it. From this, just some 10 to 20 minutes of the time, by if you are careful, you can easily get 4 to 5 marks. On a worst scale, I am telling. All right, so just let me go there. Continuous supply, okay. Tax invoice, fine. So just give me a minute. Okay, where is value of supply discussion? Page number, let me get to the page number 136. Nice. Come on. Okay, so here we have. See, even in our main material also, we have only 4 pages of discussion. See how much short the chapter is and what is the importance of the chapter. Right. So inclusions in the value of the supply. What items are required to be included in the value of supply? These are given where? Under 15 subsection 2, under different clauses. So 15 subsection 2 clause A says that taxes other than GST and compensation cess. So if the supplier is collecting from the recipient, so let us add it here itself. So we'll do one thing. So here itself we'll try to add it. So what are the additions? 15 subsection 2 clause A. First item, they say that what is required to be added is taxes. That too, what kind of taxes? Other than GST, other than CGST, SGST, IGST, and also other than GST compensation cess. Apart from these taxes, if any extra tax has been collected by the supplier from the recipient, that should be added to the value of the supply. And here the examples are sometimes the supplier will collect something called municipal taxes, he will collect some duties, he will collect. So like that, apart from the transaction value, if the supplier is collecting any additional tax, duty, whatever name you call it, apart from GST or GST compensation cess, that has to be added to the value of supply. Basically, those taxes which are not subsumed into GST, which are still there even after the implementation of GST, if those taxes are collected by the supplier from the recipient, which should be added to the value of supply. Now here there is one important clarification. Whatever TCS which has been collected by the supplier and as per the provisions of the Income Tax Act, there is one clarification. In case of certain luxury items, like in case of purchase of motor vehicles and all, the supplier will collect something called TCS. He will collect TCS under the Income Tax Act. Sir, should that TCS collected under Income Tax Act also should be added to the value of supply? No, there was a clarification. Important point. So it includes all kind of taxes which are collected other than GST and GST compensation cess, but there was a recent circular which clarifies that if the supplier has collected TCS under the Income Tax Act, as per the provisions of the Income Tax Act, that TCS should not be added to the value of supply. Please do remember this point. Then second item which should be added to the value of supply. Payments which are made to a third party by the recipient on behalf of the supplier in relation to the supply. So what is the second item which is required to be added? Payments which are made by recipient to whom? To a third party on behalf of supplier. That means for the purpose of making the supply, supplier is required to make some payment to a third party. Supplier is contractually obligated to make that payment to a third party. But on behalf of the supplier, if the recipient is making the payment, that also should be added to the value of supply. So here they say 2 conditions. So which kind of payments has to be added? Which kind of payments which are made by recipient or to the third party should be added to the value of supply? So first thing they will say, the supplier should have a contractual obligation. So I'm a recipient, I'm making some payment to a third party, but that payment obligation is actually on supplier. Supplier is actually having a contractual obligation to make that payment to third party. But on behalf of the supplier, as a recipient, I am making the payment. That will be added. So number one, supplier should have a contractual obligation to make such payments, and that payment must be related to the supply. So if any such payments are there, those are required to be added to the value of supply. Then comes the third item. They say any incidental expenses. Apart from collecting the transaction value, if the supplier is collecting any other incidental expenses. Sir, what could be the incidental expenses? The examples are commission, which you are paying to an agent and which is recovered from the buyer. Packing charges, which are billed to the recipient separately. Inspection or certification charges, if those things are getting collected extra. And installation and testing charges, or weighment, loading, designing charges, if anything which has been incurred. One more important point, these incidental expenses which are incurred at or before the delivery of the goods or services only should be added to the value of supply. Which means if any of these expenses are collected after the delivery of the goods and services, that will not be added. Those incidental expenses which are collected by the supplier from the recipient at or before making the delivery of the goods or services, that will form part of the transaction value. Very, very important, even in the case scenario based MCQs. If you are if you have taken our classes where we have done a separate booklet for case scenario based questions, there we have explained this point in a very much detailed manner. So there we have few examples where they have given the treatment. What will happen if these incidental expenses are collected after the delivery of the goods or services, that will not be added. So any of these expenses, if incurred before or at the time of delivery of the goods, those will be added. So incidental expenses also will be added. So incidental expenses, that will be added to the value of supply. Very good. Sir, what? Not just that, freight and insurance also. If a freight and insurance is getting collected by the supplier from the recipient, it will be added to the value of supply. But sometimes there will be some contracts called ex-factory. Very, very important. There will be some contracts called ex-factory contracts. In case of ex-factory contracts, there the transport and insurance, everything will be arranged by the recipient only. Supplier will not have any involvement on ex-factory basis. In case of ex-factory sales and all, the transport, insurance, everything will be arranged by the recipient. Recipient will take care of it. Supplier will not collect anything extra from the recipient. So in those cases, those will not be added. So only that if the supplier has undertaken to deliver the goods to the recipient, where he is incurring transport charges, where he is incurring insurance charges, and if he is collecting them from the recipient, then only it will be added. So please be careful about that ex-factory, whether the contract is on ex-factory basis or not. So that is the third item which should be added. Then apart from that, interest, late fee or penalty for delayed payment, that also should be included in the value of supply. That also should be added to the value of supply, which means that if you are generally the business transactions happens on credit basis, they will offer you a credit period. Within that credit period, if you make the payment, you have to pay only the actual amount. In case if you are making a delayed payment, the supplier will collect from you interest, late fee, penalty. So that interest, late fee, penalty, by whatever name, if I have to put it in simple terms, charges for delayed payment, if anything collected by the supplier from the recipient, that also should be added to the late payment charges. I will say that also will be added to the value of supply. See, here you have to be pretty careful. Why? Because sometimes in the question they will say, at the time of making the sale, the supplier has told the payment has to be made within 30 days. If you did not make the payment, I will collect a 10% interest. But in the question, they will say that even though the customer has come back and made the payment after 30 days, supplier waived off the interest. They will use the phrase supplier waived off the interest. That means even though he is having a right to collect the interest, but the supplier is exempting. If he is not collected it, no need to add it. So that you have to be very careful. In the question, sometimes they will say supplier has waived off the interest, late fee or penalty. That means supplier is exempting the recipient from making any payment for late payment. That will not be added. And one more thing, unless they mention anything, if they say that interest of certain figure has been collected, you imagine that that figure is inclusive of GST. If nothing has been mentioned in the question, simply they told that late fee of 5,000 rupees or interest of 5,000 rupees has been collected. They don't give you any extra information. Then always imagine that 5,000 rupees is inclusive of interest and do the reverse calculation. do the reverse calculation. But sometimes in the question they will say that interest whatever has been received, that is exclusive of taxes. If they say it like that, then consider the gross figure. If they don't say anything, just take that figure, whatever interest, late fee, penalty which they have collected, that is inclusive of GST, and do the reverse calculation. Better to add in the note one extra point also. Better to add note in one extra point, say that we have assumed that the collected interest is inclusive of GST. Just mention that note. However, in the question itself, if they say the interest component is exclusive of GST, take it as exclusive figure only, don't do reverse calculation. Okay, so these are precautions you have to take. And last item which is required to be added to the value of supply, to the transaction value is subsidies. Subsidies which should be directly linked to the price. So I will tell you, subsidy will be added to the value of supply only when two conditions are satisfied. That subsidy should not have been given by central government or state government. Subsidy should not have been given by central government or state government. That means other than central government or state government should have given that subsidy. Number two, that subsidy should be linked with the price. That subsidy would be directly linked to the price. It should not be a bulk subsidy, or it should not be a subsidy relating to current savings. So like that they will give you in the question sometimes to confuse you. Some party will give the subsidy not directly linked with the price. They will give some blanket subsidy, or they will say that this manufacturing entity is using for green energy, for energy saved they have given some subsidy. So those subsidies will not be added to the value of supply. So two conditions to add the subsidy to the value of supply. Number one, it should have been given by someone other than central government or state government. Number two, that subsidy should be directly linked with the price. So these two subsidies you can add it. Able to understand? So when you add all these items, so these are the items which are eligible to be added to the value of supply as per 15 subsection 2. 5 clauses we have. What are they? Number one, taxes other than GST or GST compensation says. Number two, payment which has been made by recipient to the third party on behalf of the supplier. Number three, incidental expenses which are incurred at or before the delivery of the goods or services. Number four, interest, late fee or penalty for delayed payment. Number five, subsidies which are given by other than central government or state government and which are directly linked with the price of the goods or services. So this is what 15 subsection 2 says. Now we have 15 subsection 3, which is talking about some discounts which are required to be reduced. So they say two kinds of discounts here. How many kinds of discounts they will say? They will talk about two kinds of discounts. Those discounts which are given before or at the time of delivery, but they have been shown in the tax invoice. That means if the invoice is shown in the tax invoice itself, so there is an invoice, on the invoice itself the discount has been given. Say for example, price at 10,000 rupees. In the invoice itself they have mentioned discount at 10%, 1,000 rupees of discount they have given, and in invoice itself they are collecting 9,000 from you. So now what will be my value of supply? Will it be 10,000 or 9,000? 9,000 rupees only. So if some discount has been given at the time of making the supply only, and if that discount has already been mentioned in the invoice, that is a eligible discount which has to be reduced from the value of the supply. So those discounts which are mentioned in the invoice, they will have to be reduced. And not just that, some post supply discounts. That means those discounts which are not given at the time of making of supply, which are not even mentioned in the invoice. That means this supply has been given at a later point of time. After the supply has been made, after certain point of time, even not mentioned in the invoice. So after certain point of time, post supply discounts, if any are there, those post supply discounts also will be reduced from the value of supply, provided three conditions are fulfilled. How many conditions? I will say three conditions. So post supply discount can be reduced from the value of supply if three conditions are satisfied. Number one, this discount should have been agreed, not given. There should be an agreement at the time of making the supply only. There should be an agreement to give that discount. Like for example, a business person is saying to the customer, sir, general credit period is 30 days. If you come to us and make the payment within 15 days, we will give you 1% discount. So whether that customer will come and pay or not, that is depending on the future. But at the time of making the supply only, there was an agreement. What is that agreement? That the supplier will give discount if he comes and makes the payment within 15 days. So that's why, like that, there should be an agreement. That supply should have been agreed to be given at the time of making the supply. Number two, we should be able to calculate the discount invoice wise. We should be able to calculate the discount invoice wise. It should not be some bulk discount. We should be able to calculate the discount on each invoice basis. We should be able to calculate the discount. Number three, the recipient should reverse proportionate input tax credit. So whatever discount we are offering, which has been agreed, which we can calculate invoice wise, and if the recipient is ready to reverse that proportionate amount of input tax credit, then only post supply discounts will be eligible to be deducted. See how the recipient will reverse that proportionate input tax credit is, as a supplier, we will give a credit note as per the GST Act, and that credit note will be given to the recipient, and the recipient is required to reverse that component of the input tax credit. Able to understand? So if all these three conditions are fulfilled, then the post supply discounts also will be reduced from the value of supply. So tell me, what are the three conditions? Number one, there should be an agreement at the time of making the supply to give the discount. Number two, we should be able to calculate the discount invoice wise. Number three, the recipient has agreed to reverse. Recipient actually reverses the proportionate amount of input tax credit in proportion to that discount. In case if any of these conditions are violated, then post supply discount will not be eligible to be reduced from the value of supply, and in those cases the supplier will not give a credit note as per GST Act. The supplier will give something called a commercial credit note. He will give what he will give? He will give a commercial credit note. Commercial credit note will be given, which is not on the basis of which ITC need not be reversed. Clear everybody? So this is what the treatment of the discounts, which discounts are reduced, which discounts can't be reduced. So this is how, if you do all the adjustments where you have taken the transaction value, then you make all the additions, then you reduce the eligible deductions like discounts, and you will arrive at the figure that will become the value of supply. On that, multiply the rate of GST which is applicable on that specified goods or services. Clear? Able to understand? So that's all. We have completed the second topic. See, we have spent somewhere around 20 minutes of time. I am telling you, definitely 4 to 6 marks you can score it from the topic whatever I have covered till now. Everybody comfortable? Shall we proceed with the next topic? Let us do it now. So now coming to the next topic which we'll pick up for discussion, which is, so as you all are aware, in the comprehensive question also we will have some aspects related to the calculation of input tax credit, and not just that, even as a separate question also, even as a standalone question also, we have various chances of testing a question from the input tax credit. And this input tax credit chapter is very bigger, very larger in scope. There are multiple concepts involved in that input tax credit, but very frequently where the questions are going to get tested is, one is section number 16, which is talking about the conditions which are required to be fulfilled for availing input tax credit. So sometimes you buy the goods, you buy the services, you receive the invoices, but still you are required to comply with some conditions in order to avail the input tax credit. So that conditions are given under section number 16. And along with that, one more important concept, the most important concept from the input tax credit, like the way I have told, from without a question from the value of the supply chapter, there will not be a question paper. Similarly, without a question from the concept of blocked credit 17 subsection 5, there will not be a question paper. So now we will try to quickly revise the content of the conditions which are required to be fulfilled for availing input tax credit, which is contained in section number 16, and also the concept of the blocked credit, which is contained in section 17 subsection 5. So first we will start with the conditions which are required to be fulfilled for availing the input tax credit. Okay, right. So let me take you to the relevant part of the material. So where is it? It is there at page number 175. Okay, 75. Nice. So here we have, right. So first we will be starting with section number 16, as I mentioned, which is talking about what are the conditions which are required to be fulfilled in order to become eligible to avail input tax credit. So first, if we talk about the conditions which are specifically mentioned in 16 subsection 2, let us have a quick look at it. The first condition which is required to be fulfilled to avail the input tax credit, the person whoever wants to avail the input tax credit, he must be in possession of some tax paying document. That means he should have some document which is giving evidence that he has actually made the payment of the tax. So now what could be that tax paying document? What could be that document which on the basis of which input tax credit can be taken? See, it could be an invoiced, or even it could be a revised tax invoice which is given as per 31 subsection 3 clause A. Or it could be an invoice issued by the recipient for reverse charge if it is the RCM. If you are a recipient required to pay tax under reverse charge mechanism, and if your supplier is an unregistered person, then you do the self invoicing. No, even that self invoicing also can be a valid document for availing input tax credit. And debit note, if any debit note is issued by the supplier, that also can be a valid tax paying document. Bill of entry, especially in the case of imports, and invoice given by input service distributor. So you have to be very careful, guys. Only these are the recognized documents for availing the input tax credit. So the person whoever wants to avail input tax credit, he must have possession of any of these documents only, not any other document. Only these documents are permitted, on the basis of which the recipient is available to take input tax credit. And in those documents also, some minimum mandatory details must be there. What are the minimum mandatory details which must be there in the document? It should contain minimum details like amount of tax charged, description of the goods and services, what is the total value of the supply, GSTN of the supplier and recipient, along with place of supply. These are the basic minimum required details on the tax paying document. So whatever it is, the first condition, the person whoever wants to avail input tax credit, he must have possession of some tax paying document. Number two, second condition. See, if you are a recipient, you have purchased some goods or services, you want to avail input tax credit, you can do it only when such amount has been reflected in your GSTR 2B. So we have an auto-populated statement GSTR 2B. Only that amount of input tax credit which has been reflected in the form GSTR 2B, that much amount only you can avail it as input tax credit. That is condition number 2. So if you want to avail input tax credit, that amount should have been reflected in your GSTR 2B. Then third condition, one more condition which is required to be fulfilled for availing input tax credit, you must have received the goods or services. You must have received the goods or services. So if you have tax paying document, you made the payment also, but if you have not yet received the goods, not yet received the services, you have to wait till the time you receive the goods, you have to wait till the time you receive the services in order to be eligible to avail the input tax credit. So you must have received the goods or services, then only you can avail the input tax credit. But however, there is one condition in case of bill to ship to transaction. In case of bill to ship to transaction, say for example, there is a customer A, there is a recipient Mr. B, there is a supplier, there is a recipient. So say for example, B has placed an order from A. Sir, I want you to deliver the goods. I want you to supply the goods. But what B has instructed to Mr. A is, sir, I don't want the delivery. You please ship the goods to Mr. C. You please ship the goods to Mr. C. So now A will bill to Mr. B, but he will ship to Mr. C. Here goods will be actually received by C. But this kind of transaction, we call it as bill to ship to transaction. In these cases, it will be deemed that as if this person B has actually received the goods and he can avail the input tax credit. So in case of bill to ship to transaction, this recipient, this original recipient will original recipient, whoever has placed the order, even though he did not practically receive the goods, it will be deemed as if he received the goods and he can avail the input tax credit. Very important from the examination perspective. Then one more condition which is required to be fulfilled is the GST, whatever is available to you, that should not have been restricted. In some cases, ITC input, you will be falling under certain circumstances for which there will be a restriction on input tax credit. So you should not fall under any of these restrictions. So you need not worry about, I'm not going into the details of what are those restrictions. So simply you have to remember that the GST which is available for you should not be restricted in any manner. That one more condition you have to fulfill. Then coming to the next point, tax leviable on supply should have been actually paid to the government. So one more essential condition for availing input tax credit is, so whatever amount of GST which you are availing as input tax credit, that should have been paid to the government. Say for example, there is one supplier. Okay, this supplier has given you invoice 1 lakh rupees of GST, 1 lakh rupees of taxable value, 18,000 rupees of GST, total 1 lakh 18,000 rupees of invoice he has given. So now you are a recipient. So you have got that invoice, and say for example, you have also made the payment. You have also made the payment of 1 lakh 18,000 rupees to the supplier. Now you are eligible to take the input tax credit or not. So this 18,000 you can take it as input tax credit. But in case if the supplier, whoever has collected the amount of GST from you, what is his responsibility? He should keep that 1 lakh rupees with him, and whatever 18,000 rupees of GST he has collected, that he should have paid it to government. Now what this condition says is, if the supplier has collected, if the supplier has given you the invoice, and if you want to avail input tax credit, whatever amount of GST that you are availing as input tax credit, that amount should have been paid by the supplier to the government. That amount should have been paid by the supplier to the government. So now for this, what mechanism they have told is, say for example, this transaction has taken place in the month of April 2024. So in April 2024, he has given you invoice, you made the payment also. Now when you are filing the return for the month of April, in the April return, you can claim the input tax credit. 18,000 rupees, you can claim it as input tax credit. Now, this supplier has collected the money, but he is not paying the money to the government. But the government told, we will wait. We will wait. How long they will wait, sir? Till 30th of September following the end of the financial year, the government will wait. So this transaction has taken place in the financial year 24-25. The government told, we will wait till 30th of September following the end of the financial year. So 30th of September following the end of the financial year will be 30th of September 2025. So till 30th of September 2025, the government will wait for this supplier to make the payment of this 18,000 rupees of GST. So when I say making the payment, it could be in cash, it could be in credit, doesn't matter. If the supplier is not paying the GST till 30th of September 2025, then it is asking the recipient to reverse that amount of ITC whatever they have availed on or before 30th of November. On or before 30th of November 2024, this 18,000 rupees of GST, whatever recipient has availed as input tax credit, that he has to reverse it. No interest. Interest is not required to be paid, no interest and all. Whatever ITC that you have availed, if the supplier has not paid the amount of GST till 30th of September following the end of the financial year, then you are required to reverse that amount by 30th of November. So you have to reverse it back. No need to pay any interest, just you have to reverse it. Later, if the later, say for example, this person did not pay it till 30th of September, this person has reversed it, but later this supplier has realized his mistake and he made the payment to the government in December 2025. That 18,000 rupees of GST has been paid by the supplier in December 2025. Can this recipient re-avail that input tax credit? Yes. This recipient in the month of December, once again, he can re-avail that input tax credit of 18,000 rupees. Clear? Able to understand, everybody? So this is one such concept, very important from the examination perspective. So whatever tax that is leviable on supply should have been actually paid to the government. Next, one more condition. If you want to avail the input tax credit, you should file your income tax. You should file your GSTR 3B return. So through GSTR 3B only you can avail the input tax credit. So to avail input tax credit, you have to file the GSTR 3B. So and there are few provisions associated with 16 subsection 2. Let us try to understand that provision. First provision says that if you are receiving the goods in lots, say for example, you have ordered some goods, you are not able to receive all the goods in one single consignment, you are receiving the goods in lots. In those cases, the GST Act says that you can avail input tax credit till only when you have received the last lot or last installment. When last lot of goods you have received, then only you can avail input tax credit. Not whenever you have received the first lot or in between any lots. Once you receive the last lot, then only you are required to avail the input tax credit. Now there is one more provision to 16 subsection 2, which says that you are required to make the payment within 180 days to the supplier. Say for example, there is a supplier. Okay, once again we'll try to understand with a quick example. He has given you invoice. He has given you one invoice. Say for example, 16th of August 2025. He has given you the invoice. Now, as a recipient, on the basis of that invoice, you got a copy of the tax paying document. The goods are received by you. Everything has been satisfied. So now you avail the input tax credit. Say for example, 1 lakh rupees is the amount of taxable value. 18,000 rupees is GST. So this recipient has taken input tax credit. Now what does the act say? What does the second provision to 16 subsection 2 say is this recipient should make the payment to the supplier within 180 days from the date of invoice. So from the date of invoice, within 180 days, you are required to make the payment to the supplier. In case if you are not making the payment within 180 days to the supplier, after this 180 days, whatever return you file, in that return, you have to reverse. You have to reverse the input tax credit along with interest. You have to reverse the input tax credit along with interest. See, if the supplier is not making the payment, then you are required to reverse only the ITC which you have availed. But in case if the recipient is not making the payment within 180 days of the invoice, then you are required to reverse the input tax credit along with interest. You are required to reverse it. And in case, say for example, you did not make the payment within 180 days and you have reversed the input tax credit along with interest. After that, after you have reversed it, at a later point of time, if you are making the payment to the supplier, then once again you can re-avail the input tax credit. Once again you can re-avail the input tax credit. Clear, everybody? So this is very, very important provision. And here, this making the payment within 180 days, this condition will not become applicable. That means in some cases, even though if you don't make the payment within 180 days from the date of the invoice, still you are not required to reverse the input tax credit. Sir, what are that exceptions to that 180 days payment rule? So if you see here, these are the exceptions. That means that 180-day condition will not become applicable in the following cases. When, in case if you are availing the input tax credit which you have paid on reverse charge basis. So if you are claiming such input tax credit which you have paid it on reverse charge basis, they are making the payment within 180 days. That condition will not become applicable. Similarly, deemed supplies. So as we all are aware, Schedule 1 we have, in which they have mentioned 4 activities which will be deemed as supply even without consideration. So in those cases also 180 days condition will not become applicable. See, when there is no payment only, when there is no consideration only, there is no logic of checking of making the payment within 180 days. So that's why this 180 days condition will not become applicable even in the case of deemed supplies. And also, just now as we have seen in the value of the supply chapter, in case of value of supply chapter, one of the expenses which we have to add is 15 subsection 2 clause B, the amount which is already paid by the recipient to the third party on behalf of the supplier. There also you can't, there is no condition to make the payment to the supplier within 180 days because that portion you have already paid it to the third party. So whatever it is, these are the 3 cases where that payment within 180 days condition will not become applicable, where in respect of those supplies where tax is payable under reverse charge mechanism, or those supplies even without consideration which are deemed as supply, and any addition to the value of the supply by way of payment made by the recipient to a third party. Understood? Next. And one more important aspect here, if depreciation. So in respect of capital goods, this is also one such a frequent question which will be tested. In respect of the capital goods, you have 2 options. Either you can claim depreciation of the GST paid under Income Tax Act, or you can avail input tax credit, but not both simultaneously. So the GST department has put a condition: if you have purchased any capital goods, either you can claim input tax credit or you can claim depreciation on it, not both simultaneously. And sir, what is the maximum time limit available for claiming the input tax credit? Sir, I purchased some goods, I received some services, I have invoice also, but I forgot to claim input tax credit in that month. Can I claim it later, sir? Yes, you can claim it later. Till what time I can claim it, sir? They say that till 30th of November of succeeding financial year. Till 30th of November till of the succeeding financial year, till that point of time you can avail the input tax credit. However, this time limit will not become applicable in case if you are re-availing the input tax credit which has been reversed earlier. Sir, what are the cases where I can re-avail the input tax credit which I have reversed earlier? These 2 conditions I have told, no? Where supplier is not making the payment, you are reversing it, but later when the supplier makes the payment, you can re-avail, no? So here that time limit will not become applicable. Similarly, if you are not making the payment within 180 days and you have reversed it, later you are making the payment, if you want to re-avail in that case also, then also that condition of then also that 30th of November time limit will not become applicable. So when you are re-availing the input tax credit which has been previously reversed, for that there is no time limit. In all other cases, the maximum time limit within which you can avail input tax credit is 30th of November of the following financial year. Understood? Right. So these are the few important details from section number 16, conditions. This is what some important part. Now we will talk about the next important part, which is blocked credit. So what do you mean by blocked credit? All that discussion has been contained in section 17 subsection 5. So till now, just now, as we have seen, there are some conditions which are required to be fulfilled to avail input tax credit. Say for example, if you are a recipient, you are complying with all the conditions whatever I have mentioned till now. But even some circumstances, even if you fulfill all the conditions, there are certain items, there are certain goods, there are certain services on which you can't avail the input tax credit. Sir, what are that goods, what are that services in respect of which I can't avail input tax credit even after fulfilling all the conditions given under section number 16? So that cases we call them as blocked credit. So let us try to understand what are those cases where credit is blocked. First item on which ITC is blocked is motor vehicles and other conveyance related activities. So first, blocked credit. So motor vehicles for transportation of persons with a seating capacity of less than or equal to 13. So if you are a registered person, if you purchased a motor vehicle designed to carry persons, designed to carry passengers, I will say. If you have purchased a motor vehicle designed to carry the goods, there is no restriction, you can avail input tax credit. The blockage is there with respect to only those motor vehicles which are designed for transportation of persons, that too which have a seating capacity of less than or equal to 13. That means if you purchase any motor vehicle which is having a seating capacity of more than 13, can I avail input tax credit? Yes, no restriction. So if I am buying a bus, can I avail input tax credit? Yes. So restriction is there only with respect to those motor vehicles, that too which are designed for transportation of persons, that too which have a seating capacity of less than or equal to 13 persons. If you purchase such good, then ITC will be blocked altogether. But however, if you are such a person, if you are a registered person, if you purchased a motor vehicle designed to carry persons only, having a seating capacity of less than or equal to 13, but if you use it for certain eligible purposes, then you can avail input tax credit. Sir, what are that eligible purposes? If you are buying that motor vehicle with the intention of making a further supply, say for example, I am a car dealer. So I purchased a car which is having only seating capacity of 4. But what is the intention of me buying the car is I want to resell it. Then I can avail input tax credit. So if you are buying a motor vehicle with the intention of making a further supply of such motor vehicle, that is car traders and all, for them ITC will become available. Number 2, if you are making a taxable supply of transportation of passengers, say for example, I am buying a cab, I am buying a car which is having a seating capacity of 4, and why I am purchasing that car is I want to provide the cab services. For the purpose of transportation of passengers, I want to use that motor vehicle. Can I avail ITC? Yes, you can avail it. Or if you are making a taxable supply of importing training on driving such motor vehicle, I am running a car driving school, that's why I purchased a car, then also I can avail the input tax credit. So generally a motor vehicle designed to carry passengers with a seating capacity less than or equal to 13, ITC will be blocked. But if you use it for these 3 eligible purposes, if you have purchased it for making a further supply, if you have purchased it for providing the taxable services of transportation of passengers, if you are purchasing it for the purpose of providing taxable services of imparting driving skills, then you become eligible for input tax credit. Next, similarly, vessels and aircrafts. One more item on which ITC is blocked is vessels and aircrafts. So if you have purchased a vessel, if you have purchased an aircraft, on that also ITC will be blocked. But however, if you are purchasing a vessel or an aircraft, but if you are making the use of it for some eligible purposes, then you can avail input tax credit. Sir, what are the eligible purposes? Same. I am buying that vessel or aircraft with the intention of making a further supply, or I am buying that vessel. In case of vessel, I am buying it for the purpose of transportation of for the purpose of transportation of passengers. If I am using it, then also I can avail the input tax credit. Or in case if I am using it for the purpose of imparting driving skills, driving we don't say it. For the purpose of vessel, we say it as navigating. If I am imparting training on navigating such vessel, if it is an aircraft, we say imparting training on flying. Same guys, the same 3 eligible purposes. Along with that, they say one more thing. If you are using that vessel or aircraft for transportation, for making a taxable supply of transportation of goods, then also ITC can be availed. So one main difference between vessel and aircraft and motor vehicle is for 3 purposes will remain the same. But if you are using the vessel and aircraft even for transportation of goods, for making a taxable supply of transportation of goods, then also you can avail input tax credit. Clear? Sir, then what about this third item on which ITC is blocked is, say for example, so 3 things they will say: general insurance, service, repair and maintenance. Say for example, motor vehicle is there, vessel is there, aircraft is there. So when you purchased a motor vehicle, vessel or aircraft, on that you have to incur general insurance, you have to pay insurance for that motor vehicle, vessel or aircraft, and also you might be required to undergo maintenance, you might be required to undergo servicing, you might be required to undergo repair. These expenses also you will incur, no? So now what GST Act says is, if you are not eligible to avail ITC on the motor vehicle, vessel or aircraft, you will also not be eligible to avail input tax credit on these expenses incurred for that motor vehicle, vessel or aircraft. If you are eligible to avail input tax credit on motor vehicle, vessel or aircraft, then you will also become eligible to avail the input tax credit on general insurance, services, repairs and maintenance of that motor vehicle, vessel or aircraft. Simple logic guys. If you are eligible to avail input tax credit on motor vehicle, vessel or aircraft, even on that motor vehicle, vessel or aircraft, whatever general expenses, whatever maintenance, services, repairs, expenses you are incurring, that ITC also will become eligible for you. If you are ineligible to claim the input tax rate on motor vehicle, vessel or aircraft, then you also become ineligible to claim the input tax rate on general insurance, maintenance, services and repairs with respect to that motor vehicles, with respect to that motor vehicles, vessel or aircraft. And also they say one more thing here: these expenses, general expenses relating general insurance, maintenance, service, repair, ITC on these expenses will be available to manufacturers. Those people who are manufacturing these motor vehicles, vessels or aircrafts, if they are incurring general insurance, services, repairs and maintenance with respect to motor vehicle, then they can avail input tax credit. And also these services on this ITC can be availed by those people who are providing the output services of general insurance. Basically, insurance companies also can avail ITC on these expenses. Clear, everyone? So this is what the third item, and along with the exceptions. And one more thing, leasing, renting or hiring of the motor vehicle, vessel or aircraft. So now once again the same logic. Say for example, I'm a general person. If I'm buying a motor vehicle designed to carry less than 12 passengers, will ITC be blocked? Yes, ITC will not be available. If I'm buying a vessel, but if I'm not using it for eligible purposes, will ITC be blocked? Yes. If I'm buying an aircraft but not using it for eligible purposes, will my ITC be blocked? Yes. Sir, instead of buying, I will do one thing. I will lease them. I will lease a motor vehicle. I will lease a vehicle. I will lease a vessel. I will lease a aircraft. Sir, on that, can I enjoy input tax credit? The act told no. If you are unable to claim the input tax credit on motor vehicle, vessel or aircraft, even on leasing of motor vehicle, vessel or aircraft also, you will not be able to avail input tax credit. Which means if I am leasing a motor vehicle, vessel or aircraft and I am using it that for eligible purposes, then I can claim input tax credit. Sir, what are that eligible purposes? If I am renting a motor vehicle for the purpose of providing imparting motor vehicle driving skills, or if I am renting a cab and providing the cab services, then ITC will become eligible. Okay, for eligible purposes it will become eligible. Clear? And also they say that if you are into same line of business, say for example, I am renting a motor vehicle, I am a recipient, I rent a motor vehicle and I further give it on rent. So if you are into same line of business, then also ITC you can avail it. And also one more exception also they have provided. If a company or an entity is receiving this renting of motor vehicle, vessel or aircraft to provide transportation services to their employees for statutory obligation, because of a statutory obligation, then that entity also can avail the input tax credit. Then that entity also can avail input tax credit. So simply, if I have to put it, if you are eligible to claim input tax credit on purchase of motor vehicle, vessel or aircraft, then on leasing also you will be able to avail the input tax credit. Or if you are into same line of business, then also you can avail input tax credit. Or if an entity is hiring it to provide transportation services to its employees, see here, such services when provided by an employer to its employee under a statutory obligation, then also they can enjoy input tax credit. Clear, everyone? Next. Now coming to the next category of blocked credit cases. So if any entity, if a recipient, if a registered person is buying any food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance services, on all that ITC is blocked, except when you are also engaged in making a same supply, either as an individual supply or as a component of mixed or composite supply. So basically, if you are into same line of business, if you are availing these services and you are using it for same business or as a part of composite supply of another supply, then you can enjoy input tax credit. Or if these services or goods are getting availed for providing to their employees under a statutory obligation, then also you can enjoy the input tax credit. Clear? Next. Similarly, membership of a club, health and fitness center, on this ITC you can avail it only when it is provided to employees under a statutory obligation. Travel benefits extended to employees on vacation such as leave or home travel concession, this also ITC will be available only when provided as a statutory obligation. If there is no statutory obligation, but still if the employer is providing these services to the employees, ITC will not become available. Then we have works contract services for construction of immobile property. Sir, what do you mean by this? So say for example, there is a recipient who is a registered person. Now they want to construct one office building. They want to construct some office premises. So they went to one works contractor and they asked this works contractor to construct a factory building or factory office for them. The works contractor told, okay, I will construct that for you for 50 lakh rupees. He gave the invoice, say for example, 10% is a GST. He gave invoice 50 lakh rupees value of supply, 5 lakh rupees GST, total 55 lakh rupees worth of invoice they have given. Now, can this recipient, can he avail ITC of that? The answer is no. So if you are receiving any works contract services in relation to any immobile property, then on that you can't enjoy the input tax rate. ITC is blocked there. However, only on those expenses ITC will be blocked which is capitalized in the books of accounts. So if you are constructing an immobile property and if it fulfills the criteria of capitalization as per the accounting standards, only on that ITC will be blocked. On the other hand, say for example, there is one registered person, he is having one building. In that building, some repairs is required to be undertaken. So they went to the works contractor. He agreed to do the works contract for that repairs activity in that immobile property. He charged some 5 lakh rupees of bill and 50,000 rupees of GST he has charged. But this expense does not fulfill the capitalization criteria as per accounting standards. It has to be treated as revenue expenditure in the books of accounts. Then they can avail the input tax credit. So whatever services, whatever works contract services which are received in relation to construction of an immobile property, generally ITC is blocked. But when ITC will become available? Number one, if that is treated as revenue expenditure. If it is not a capital expenditure, if it is treated as revenue expenditure, then ITC will become available. One more exception when ITC will be available is if you are receiving the works contract services to make the same kind of supply. You are receiving the works contract services, but you are into the same business of supplying the works contract to others. So then if you are using it for making the same kind of supply to others, then also ITC is available. And one more thing they say here, if you are receiving works contract services in relation to construction of an immobile property, but that immobile property qualifies as eligible plant and machinery, then also ITC will be available. So generally works contract services ITC will be blocked in relation to immobile property, but however ITC will become available in 3 cases. What are that 3 cases? What are the allowed 3 circumstances? When that works contract services are received for making further works contract service, and that works contract service, that immobile property will result in construction of eligible plant and machinery, and when that expense is not capitalized, then also you can avail input tax credit. So now what do you mean by eligible plant and machinery? We have given the definition here. So it includes apparatus, equipment, machinery fixed to earth by foundation, structural supports for outward supply. But however, what is not included in the plant and machinery definition, that is very, very important. Land will not come under eligible plant and machinery. Buildings will not come under eligible plant and machinery. Civil structure will not come under eligible plant and machinery. Telecommunication towers also will not come under eligible plant and machinery. Pipelines laid outside of the factory also will not come under plant and machinery. Clear? Next. Now they say this is an extension to the previous point only, self-construction of immobile property. So say for example, there is one registered person, as previously I have told, if you want to construct one office building, if you go to the works contractor and receive the works contract services, ITC is blocked. Now this recipient thought something. If I receive works contract services, on that ITC will be blocked. Let me do one thing. What I will do is, I will do the construction of the office building on my own. So I will buy all the goods required for the purpose of construction. I will receive all the services which I require for the purpose of construction. I will carry out the construction on my own. So now can this registered person, can he avail ITC on these goods and services which he is using for construction of immobile property on his own? Now the act says on this also ITC is blocked. Why? Because if they allow it, this will be overriding of the previous rule. So that's why what they have told is, even if you are constructing the immobile property on your own, then also ITC will block you. However, once again, the same exceptions will become applicable here. Number one, if it is a revenue expenditure, then you can claim input tax credit. Number two, if you are using it for construction of a eligible plant and machinery, then you can avail input tax credit on it. Number three, if you are not doing the construction on your own account, if you are doing that construction for others, if that construction is not for you, you are receiving some money and doing that construction for others, that means it is not for your purposes, for others you are doing the construction, then you can avail the input tax credit. So that is what they say here, 3 things. So when the self-construction of immobile property ITC will be available, number one, construction of eligible plant and machinery. Number two, value of the goods and services is not capitalized, and construction is not on own account. You are not doing the construction for your own, you are doing the construction for others. Clear? And one more thing, if you are buying the goods from a person who is required to pay tax under composition levy, will you become eligible to avail input tax credit? No. Say for example, you are buying the goods from a registered person, but that person is a composition dealer from whom you purchased the goods or services. Can you take input tax credit on that? No. Why? Because composition dealer will not pass on the credit, will not avail the input tax credit. He will break that ITC chain altogether. Next, Inward supplies received by NRTP. If you are a NRTP, then whatever inward supplies you have received, on that also ITC will be blocked. And only in one case ITC will become available, when you are importing the goods. When you are importing the goods, then ITC is allowed. Even on import of the services also ITC is blocked. If you make local purchase of the goods and services, ITC will be blocked. If you are importing services, ITC will be blocked. Only when you are importing the goods, ITC is available. Next, sir, there is some company which is required to meet the CSR requirements. For the purpose of fulfilling the CSR requirements, they have purchased some goods or services. On that, can they enjoy input tax credit? No. So inputs are supplied or intended to be used for CSR activities, ITC will be blocked. And if a recipient received any supplies which are used for personal consumption, not for business purposes, for personal consumption they have got it, then also ITC will be blocked. And the goods which are distributed as free samples, gifts, goods lost, stolen, on that also ITC will be blocked. And then finally, yeah, that's it. No, this one. Tax paid in fraud cases, detention and confiscation. However, there was an amendment in this area. So if I take you through the amendments here, so I will ask you to refer to the amendments part here. Now they have made available, you can enjoy input tax credit for this is amended. This provision has been amended. You can enjoy input tax credit for those GST which has been paid under section 24, section 129, 130. Even under these sections also, if you have paid any GST, you can still become eligible to avail the input tax credit. There was a related amendment, so I suggest you to refer the amendment video once here. Clear? So these are the requirements of, these are the cases where the ITC has been blocked. Clear? Able to understand everybody? Right. So one more aspect we have covered. So this one also we had done. Place of supply for, sorry. This one also we have covered. ITC, conditions and block the trade also we have covered. One such important aspect, guys, I'm telling you, every attempt you find a question from this concepts of whatever I have revised now. Clear? Understood? Shall we proceed further? Let us do it. So now coming to the next topic which we would take up. So one more important aspect from the examination perspective, which is how to determine the place of supply for services. This we will focus on. So as you all are aware about the importance of the chapter place of supply. So in that place of supply chapter also we have two parts. One is how to determine the place of supply for goods, and the other one is how to determine the place of supply for services. So now I am going to concentrate on how to determine place of supply for services. Why? Because this is one such area where huge number of questions are going to, a compulsory question is going to come from. Not huge number, is compulsory question will be there from how to determine the place of supply for services. Either this also could be a question which could be linked with a comprehensive question where we are required to calculate our GST liability, or it could be a standalone question which could be tested for 4 marks, 5 marks, 3 marks, something like that. So whatever it is, let us go to the place of supply chapter. Yeah. So place of supply we have here. So for place of supply also, as you could see, we have two sections. Section number 10 talks about how to determine place of supply for goods other than imports and exports. Similarly, section number 12 is also going to talk about how to determine the place of supply for services. So as I've told, I'm going to focus more on how to determine place of supply for services. But one thing I would like to explain in the case of goods, how to determine place of supply in case of bill to ship to model. In case of goods, I want to concentrate on only one point, only one section, section 10 subsection 1 clause B, which is talking about how to determine the place of supply in the case of bill to ship to transaction. This question also I am very frequently seeing it in the RTPs, MTPs, and also in some previous examinations. So this I will speak on a bit. How to determine goods, only one point I will talk. How to determine place of supply for bill to ship to transaction. So this we are already aware what is a bill to ship to transaction. But once again, let me give you one example. Say for example, there is one customer. There is a person, Mr. B, who is a registered person and he is registered in Delhi. Okay. So now there is one supplier. There is a supplier, Mr. A. There is a supplier, Mr. A, who is in Mumbai. Okay. So now this person, Mr. B, placed an order with Mr. A. So what is that order is, they needed some 1 lakh worth of goods. They needed some 1 lakh worth of goods. But what Mr. B has ordered Mr. A is, sir, I want you to deliver. He's having one customer, Mr. C, who is also in Mumbai only. So this recipient asked the supplier to ship the goods to the customer who is there in the Mumbai location only. So this is a typical bill to ship to transaction where the supplier Mr. A will bill to Mr. B and the supplier Mr. A will ship the goods to Mr. C. Now here it involves two supplies. One is the supply between A and B, which is a bill to ship to transaction, and there is another transaction between Mr. B and C. Now I will talk about this aspect, how to determine the place of supply for a transaction which has taken place between Mr. A and B. So here 10 subsection 1 clause B says that even though the goods are delivered at Mumbai, it will be deemed it has been received by Mr. B, and whatever this location of this person, this registered place of business of Mr. B, whatever is there, so that is Delhi. Delhi will be considered as a place of supply. Delhi will be considered as place of supply. Sir, this is not where the goods have come, no, but still 10 subsection 1 clause B says in case of bill to ship to transaction, for the transaction between Mr. A and B, which is a typical bill to ship to transaction, the place of supply will be the location of this recipient, which is Mr. B. So here the place of supply will become Delhi. Able to understand? So this is one particular aspect which I would like to focus here. Very important from the examination perspective. Clear everyone? Right. Let us try to understand. Okay. Yeah, this is what the entire example you will be able to find it in the material here. Right. So now we will go to how to determine the place of supply for services. We'll try to determine. So in the default, in the section number 12 of the IGST Act, we'll actually talk about how to determine place of supply for services. We have various subsections. So starting from 12 subsection 3, 12 subsection 4, 12 subsection 5, like that. So starting from 12 subsection 3, each section will be talking about specific services and how to determine place of supply. However, we have one default provision 12 subsection 2. If some supply is getting provided which is not getting covered anywhere under any of the subsections starting from 12 subsection 3, then we have to come to the default section and determine the place of supply as for this default provision. But default provision is the last resort. First, for determining for any service the place of supply, we should see whether that supply is falling under any of the specified categories starting from 12 subsection 3. Like we have 12 subsection 3, which will deal about how to determine place of supply only in relation to services of an immobile property. Like we have 12 subsection 4, which is talking about how to determine place of supply for only restaurant, catering, personal grooming, fitness, beauty and healthcare services. 12 subsection 5, which will talk about only training and performance appraisal services. So starting from 12 subsection 3, each subsection will talk about only one specific kind of service. So as a service provider, if you are providing the services, first you should check whether your service will fall under any of the specified categories. No, if it is not falling under any of the subsections starting from 12 subsection 3, then you have to come to the default provision, and according to the default provision contained in 12 subsection 2, you have to determine your place of supply. So before we come to the default provision, let us try to cover everything relating to the specific services. So starting with 12 subsection 3, which is talking about how to determine place of supply for services in relation to an immobile property. Sir, what and all services 12 subsection 3 will take into its perspective? So it will talk about any service which is relating to immobile property like architect, interior decorators, surveyors, real estate agents. All these people are providing services in relation to immobile property. Then granting rights to use the immobile property or coordinating construction work like construction services or renting of immobile properties. It also takes into its perspective lodging services, whether in hotels, guest houses, composite campsites or even vessels. It even includes accommodation services for organizing events like function halls, wedding, cultural, religious events, etc. And even ancillary services, supporting services for the above. So these are all the broad categories of the services which are covered under 12 subsection 3. And simply 12 subsection 3 says that in respect of all these services in relation to immobile property and boarding and lodging services, the place of supply will be generally location wherever the immobile property is located. So wherever that immobile property is located or intended to be located, that will become the place of supply. But however, if the property is located or intended to be located outside India, then the location of the recipient will become the place of supply. So only two things they say here: for all these services, first we have to check what is the location of that immobile property. If the location of the immobile property is in India, then the place of supply will be that location wherever that immobile property is situated. But however, if the location of the immobile property is outside of the India, then location of the recipient will become the place of supply. Location of recipient will become the place of supply. So now sometimes, now here they say a few cases here, in some cases supply in relation to immobile property will be provided, but that activity, that supply will be provided in more than one state. Like say for example, there is one person, he is went to Taj chain of hotels for availing the accommodation, hotel services. Now Taj Hotel is collecting 50,000 rupees of consideration from him. So for this 50,000 rupees of consideration, Taj Hotel will provide accommodation in Jaipur also. Taj Hotel will provide accommodation in Mumbai also. For two places, their hotels are having presence all over India. Now, they collected 50,000 from the customer. For this 50,000, they provide the stay in Jaipur. They also provide the stay in Mumbai. So now what will be the place of supply? They say that in these cases, it will be divided on the basis of number of nights stayed in such property. Like for example, for this 50,000 rupees, 2 nights of stay in Jaipur, 3 nights of stay in Mumbai. So now this 50,000 rupees will be divided in the ratio of 2:3. So 20,000, for 20,000 value of supply, the place of supply is going to be Rajasthan, which is where Jaipur is located. And for the balance 30,000, the place of supply is going to be Maharashtra, where the Mumbai is situated. Right? Next, one more thing here. In some cases, what will happen is, say for example, there is one piece of land. There is one piece of land which is on the border of Karnataka and Tamil Nadu. There is one piece of land which is at the border of Karnataka and Tamil Nadu. Say for example, 10,000 SFT land is there. Now this land is used mainly for destination wedding. So there is a owner of the property. He has given that land for the purpose of someone who wants to have their destination wedding here. So now for this entire renting out of this land, he has collected some 1 crore rupees. Sorry, not 1 crore. They can purchase it. So 1 lakh rupees of rent he has collected. Now generally, as I have told, the place of supply is location where the immobile property is located. But this immobile property is located in 2 states. In between there is a border of the 2 states. So now what will be the place of supply? They say that in these cases, the value has to be divided on the basis of area of the land. Say for example, out of this 10,000 SFT, 4,000 SFT is there in Tamil Nadu, 6,000 SFT is there in Karnataka. So now you have to divide this 1 lakh rupees in the ratio of 4:6. For 40,000 value, the place of supply will be Tamil Nadu. For 60,000 value, the place of supply is going to be Karnataka. Next, and in some cases, what will happen is, say for example, you are availing an accommodation in a vessel. But this vessel is starting from Kerala. Now it will travel in the inland waterways of Karnataka, and once again for 3-4 days it will come back, and once again it will stop it at Kerala. So for 3 to 4 days you will stay in that boat house or something, which will not just stay in one state. It will touch multiple states as a part of that service. Now, how to determine this value of how to determine the place of supply for these services? Now they say that in these cases, the value has to be apportioned on the basis of time spent by the boat or vessel in each of such a state or union territory as declared by the service provider. So service provider will give the declaration. So this much time we have spent in Kerala, this much time we have spent in Karnataka. He will give one declaration. According to that declaration, we will bifurcate the value, and accordingly we will determine the place of supply. So this is what 12 subsection 3 says, how to determine the place of supply in relation to services of an immobile property. Now 12 subsection 4, very simple provision. 12 subsection 4 only talks about restaurant services, catering services, personal grooming, fitness, beauty and health services. So for all these services, the location, the place of supply will be location wherever these services are actually performed. So the place wherever these services are getting performed, that will become the place of supply. Then 12 subsection 5 is talking about training and performance appraisal services. Here, what will be the place of supply? That depends on the recipient. If the recipient is a registered person, then the location of the recipient will become place of supply. If the recipient is an unregistered person, in that case, the place wherever the service is actually performed, that will become the place of supply. So what does 12 subsection 5 talk about? It talks about only training and performance appraisal services. So the place of supply will depend upon what is the status of the recipient. If the recipient is a registered person, location of the recipient. If the recipient is an unregistered person, the place wherever that event has, wherever that service is actually performed, wherever you are conducting the training, wherever you are conducting the performance appraisal services, that place will become the place of supply. Next, 12 subsection 6, which is talking about how to determine place of supply by way of services relating to admission to events, amusement parks, or other places like this Wonderlaw you take or any other film city you take. So how to determine the place of supply in relation to services of admission to events, amusement parks, or other places like circus, or all these things will come here. So they say that the place of supply will be wherever the event is held or wherever that park or place is located. Location where the event is performed or the location where that park is located, amusement park or that visiting place is located, that will become the place of supply. Then we have 12 subsection 7, event organizing services. Sir, how to determine place of supply for event organization services? Very simple. Here also it depends on what is the status of the recipient. If the recipient is a registered person, location of the recipient will become the place of supply. However, if the recipient is unregistered person, then the location wherever that event is happening, that will become the place of supply. However, if the event is held outside India, then location of the recipient. See, if the recipient is registered, then where the event is getting conducted doesn't matter. Always location of the recipient will become the place of supply. But however, in case of recipient is unregistered, then we need to check wherever the location is, where the event is happening. If the event is happening within India, then the place where the event is happening, that will become the place of supply. In case if the event is happening outside of India, then the location of the recipient will become the place of supply. Understood? Next. Then goods transportation services. So we have today various goods transportation services. How to determine the place of supply in relation to transportation of goods. Here also it depends on what is the status of the recipient. If the recipient is a registered person, then the location of the recipient will always become the place of supply. However, if the recipient is unregistered person, then they say the place, the location wherever the goods are handed over for transportation. Wherever you are handing over the goods for transportation, basically from wherever you want to transport the goods, there you will go and deliver that goods. No, you will go to that courier office, you will go to that GTA service provider and say that, sir, these goods have to be transported. So wherever you are handing over the goods for transportation, that will become the place of supply when the recipient is unregistered. Whereas in case if the recipient is registered, location of the recipient will always become the place of supply. Then we have passenger transportation services. Here also more or less the things will look same. If the recipient is a registered person, location of the recipient will be the place of supply. However, if the recipient is unregistered person, then they say the location wherever the passenger embarks on the conveyance, wherever you are boarding that conveyance for a continuous journey, that will become the place of supply. If you are a registered person, your location itself will become the place of supply. But if you are unregistered person, then the person whoever is providing that services, he will determine wherever you are embarking, so that will become the place of supply. Then see, sometimes what will happen is you will avail passenger transportation services, but where you will not avail the service immediately, but instead you get a token or instead you get a right of passage, like for example metro train, or you get some vouchers which you can use it for the purpose of transportation. So in those cases, how to determine the place of supply? That will be governed by the default provision 12 subsection 2. We will see anyhow once we complete all the specific sections, then we go to the general provision. No, in case if you are not directly getting the passenger transportation services, but instead if you are getting a right to passage for future use, and when you will use it, where you will board, you don't know. In those cases, it will be decided on the basis of the default provision 12 subsection 2, which we will see it once we complete all the specific provisions. Next, and most important part here, return journey will be treated as a separate journey. Sometimes you book a round trip. In that cases also, it will not be treated as single journey. Your two journey from journey, both will be treated as two separate journeys, and accordingly for both the journeys you have to determine the place of supply. Even though you book a single round trip ticket, but still it will be considered as two journeys, and accordingly you have to determine the place of supply. Next, services supplied on board a conveyance. So sometimes you board a flight, you are getting bored, you want to watch a movie, you pay some money and this airline company will allow you to watch a movie. So here that airline company is providing the services on board. So in those cases, what will be the place of supply? They say that in case of services supplied on board a conveyance, place of supply is the location of first scheduled point of departure for that conveyance for the journey. So whatever is the first scheduled point of departure, not wherever the goods are, not wherever the person embarks, first scheduled point of departure. Sir, what do you mean by this? Here I wanted to elaborate a little bit. Say for example, there is one flight, okay, which is scheduled to go from Bangalore to Delhi. Bangalore to Delhi. Now, in between, one stop is there. Halt is there at Mumbai. Halt is there at Mumbai. So now, one passenger has boarded this flight at Mumbai. Now, on his journey from Mumbai to Delhi, he is getting bored. Now, he is availing the services. Services are supplied to him on board a conveyance. Now, what will be the place of supply? So the place of supply, they say that first schedule point of departure might be this passenger has boarded this conveyance at Mumbai location, but that will not become the place of supply. What is the first schedule point of departure? The first schedule point of departure is the Bangalore. Bangalore will become the place of supply. Able to understand here? So that is what this particular section says. 12 subsection 10 talks about services supplied on board a conveyance. Now let us come to telecommunication services. How to determine the place of supply for telecommunication services? This we have to pay attention. So when I say telecommunication services, there will be different kinds of telecommunication services. Postpaid, prepaid, then we have leased circuits. So like that, the meaning, the things which will be included in the telecommunication services is very broad, wide range of services get covered there. So for different services, they have told the how to determine place of supply. So first they speak about telecommunication line, leased circuits, internet leased circuits, or cable or dish or antenna. In all these kind of services, where the telecommunication line or leased circuit or cable connection or dish antenna, wherever it is installed, the place of installation of these devices will become the place of supply. For which kind of services? For fixed telecommunication lines, leased circuits, internet leased circuits, or cable or dish antennas, wherever this devices, wherever this equipment is installed, that will become the place of supply. But here, sometimes what will happen is, sometimes you get a leased circuit. Sometimes you say, for example, one corporate company is there. So one corporate company is getting a leased circuit. They are having one head office in Mumbai. They are also having a branch office in Delhi. Now they need a leased circuit connecting both the locations. So they have one leased circuit installed at, they have one leased circuit equipment installed at Mumbai. One point is there in Mumbai. Another point is there in Delhi. Sir, you told that in the case of leased circuit, wherever this entity, wherever this equipment is installed, that will become place of supply. But here the point is installed at Mumbai also. The point is installed at Delhi also. Now what will be the place of supply? Now they say that, say for example, for providing this service, the telecommunication company has charged me 1 lakh rupees. Now what is the place of supply? They say that in these cases, the value has to be divided on the basis of number of points in each state. So in the Maharashtra, they have 1 point. In Delhi, they have 1 point. So in the ratio of 1:1. So for 50,000 rupees, the place of supply will be Maharashtra. For 50,000 rupees, the place of supply is going to be Delhi. Now let me give you another case. There is one company which is getting a leased circuit. Now they have 3 offices. Head office is there in Mumbai. They have one branch office in Pune. They have another office in Delhi. Now they need a leased circuits to connecting 3 units, 3 locations. So they have 1 point in Mumbai, they have 1 point in Pune, they have 1 point in Delhi. And for providing this service, the telecommunication company is charging 1,50,000 rupees. Now what will be the place of supply? As I have told, it will be divided in the ratio of number of points in each state. So if you see here, Mumbai in 1 point is there, Pune 1 point is there, but both are belonging to Maharashtra. So in Maharashtra total you have two points, in Delhi you have 1 point. So this 1,50,000 you have to divide it in the ratio of 2:1, which will come to 1,50,000. For this 1 lakh rupees, the place of supply will be Maharashtra. For this 50,000 rupees, the place of supply is going to be Delhi. Clear everyone? Able to understand here? So like this, in case if these things are getting spread across multiple states, on the basis of number of points, you have to divide it. Next, Sir, what about postpaid mobile connection and internet services? How to determine place of supply for this? It depends on location of the billing address of the recipient, which is available in the records of the supplier. For postpaid customers, generally the telecommunication company, they will have the record. In that record, address of the recipient will be there. That will become the place of supply. Sir, what if address is not available? Generally, it will not be. It will be available. But in case, because of any reason, if address is not available, then the location of the supplier itself will be treated as supply of services. Next one. Then we have prepaid mobile connection, internet services and DTH services provided through selling agent, reseller, distributor. So previously we used to have that recharge cards, recharge coupons and all. So where there will be a shopkeeper. So this telecommunication company will sell the voucher or give that device to the shopkeeper. Shopkeeper will sell it to the ultimate customer. Now they are talking about this a transaction. Those prepaid mobile connection services which are provided through that selling agent, reseller, distributor or identity module card. So in this transaction, what will be the place of supply? Here the place of supply will be address of that agent, reseller or distributor. So wherever basically the shopkeeper is located, that will become the place of supply. Sir, now the shopkeeper will sell this voucher or do the recharge from the device to the customer. No, for this transaction, what will be the place of supply? So that they say here, services provided by any person to the final subscriber, location wherever such prepayment is received or wherever such vouchers are sold. So generally you go to the shopkeeper, make the payment and he will do the recharge, no? Or you go to the shopkeeper, pay the money, he will give you a voucher. This is not happening today. This used to happen a few years ago. So that place wherever prepayment is received or that place wherever the vouchers are sold, that will become the place of supply. Then, sir, what about prepaid services, sir, where the payment is made through internet banking or electronic mode of payment? Today, whatever is happening, today we are getting the prepaid services. We do the recharge in an electronic format. We make it through UPI, through our debit cards, credit cards, we get the payment done, we get the recharge done. For that, what is the place of supply? So here they say that location of the recipient of the service as available in the records of the supplier of services. Today, all the telecom companies will have a record. In that record, the details of all the details and addresses of all the subscribers will be there. Generally, today you are aware, if you want to get a SIM card, you have to give your Aadhaar card. So if you are giving the Aadhaar card, your address details and all are captured by the service provider. So whatever address as per the supplier's records, whatever is the location of the recipient of the service, that will become the place of supply. So in all other cases, the place of supply will be more or less kind of default rule. If the address of the recipient is available on the records, then that address of the recipient. If address of the recipient is not available in the records, then the supplier of the service address, so location of the supplier of services will become the place of supply. Clear everyone? Right. Next, financing and stock broking services, which is addressed under 12 subsection 12. So in case of financial and stock broking services, if the location of the recipient is available in the supplier's record, location of the recipient. If the location of the recipient is not available, then the location of the supplier of the services. Insurance service, here they divide it on the basis of whether the recipient is registered or unregistered. If the recipient is registered, if the recipient is registered, location of the recipient. If the recipient is unregistered, here also we will see whether address of the recipient is available in the supplier's records. If yes, address of that, then the location of the recipient. What, sir? What if address is not available? Location of the supplier itself will become the place of supply. Then we have advertisement services provided to the government, not that much tested in the examination. This I will not do it. Why? Because it is a very lengthy provision, but the chances of getting tested in the examination is very, very low. But one thing you have to remember here, one point I will try to say, 12 subsection 14 addresses only those advertisement services which are provided to government. Advertisement services provided to others will not get covered under 12 subsection 14. It will go to the default rule, 12 subsection 2. So only advertisement services which are provided to the government will only fall under 12 subsection 14. Advertisement services provided to others, it will not get covered under 12 subsection 14. It will go to the default rule. So now what is the default rule, sir? If I am providing any service which is not getting covered anywhere from 12 subsection 3 to 12 subsection 14, now I have to come to 12 subsection 2. Like say for example, I'm a chartered accountant, I'm doing audit service, I'm doing tax filing services. So you would have paid attention, my service will not fall under any of the specified categories. Now how to determine place of supply? Come to the default rule 12 subsection 2, which says that if the recipient is registered, location of the recipient will become the place of supply. If the recipient is unregistered, then we have to check whether location of the recipient is available. whether address of the unregistered person is available in the records of the supplier. If available, then address of the recipient. Sir, if address of the recipient is not available, sir, then the location of the supplier of the services. So if the recipient is registered, always location of the recipient. If the recipient is unregistered, then we need to check whether address of that recipient is available in the supplier's records. If available, well and good, location of the recipient. If address is not available, then the location of the supplier itself will become the place of supply. So this is one such important provision, how to determine place of supply for services from which there is a high chance of asking the question in the examination. Clear, everyone? Able to understand? So with this, we have covered one more topic from our agenda. We have wrapped up one more concept, which is the place of supply for services. Also, we have covered it. Clear, everyone? Right. So now coming to the next aspect, the next topic which we will pick for revision is actually from the supply chapter. In the supply chapter, if you are aware, section 7 subsection 1 clause C is there, which says that there are certain activities which will be deemed as supply even if done without consideration. There are certain activities which will be deemed as supply even without consideration, and those activities are mentioned in schedule 1. And in that 4 paras are given, para 1, para 2, para 3, para 4. So those 4 activities, even if done without consideration, they will be deemed as supply as per section 7 subsection 1 clause C. See, from this part also, from this part of the supply chapter also, we are seeing compulsory question each and every attempt. So let us try to have a quick look at those activities which will be deemed as supply even if done without consideration. So shall we do it, everyone? So let us do it. So let me go to the supply chapter here. Yes. So those activities which will be deemed as supply even without consideration. And how many paragraphs we have here? 4 paragraphs we have here. So we will try to understand all that 4 paragraphs which will be deemed as supply even if done without consideration. So starting with the first paragraph, permanent transfer or disposal of a business asset. So if there is any business asset, when I say business asset, I am talking about the goods, capital goods, everything. So if there is any business asset on which ITC has been availed, and if that business asset is getting permanently transferred or disposed of, and if that business asset is done what? It is permanently transferred. It is not some temporary transfer where you will get it back. That business asset should be permanently transferred or disposed of. Then even if without consideration, if you are permanently transferring or disposing it off, still it will be treated as supply, and on that you might be required to pay GST. So what do they say here? So in order to qualify as supply under this para number 1 of schedule 1, what are the conditions which are required to be fulfilled? So as you could see here, number 1, the disposal or transfer of the business asset should happen, that too on a permanent basis. On a permanent basis, you are transferring it. And to qualify as supply, the following conditions must be fulfilled. What are they? Disposal or transfer of business asset, and it must be done on a permanent basis, and ITC must have been availed. Only those business assets on which you have availed ITC, if those are getting permanently transferred or disposed of, then only it will be treated as supply. So there might be certain cases where you have purchased a business asset on which either ITC is blocked. See, just now we have seen what are the cases where ITC will be blocked. Say for example, I purchased a motor vehicle having a seating capacity of less than or equal to 13. See, on this ITC is blocked, I can't avail it. Later, if I am permanently transferring or disposing it off without any consideration, will it be deemed as supply? No, it will not be deemed as supply. Why? Because under para number 1 of schedule 1, an activity will be deemed as supply only when there is a ITC availed on it. But in case of motor vehicles, ITC is blocked. If you are making a permanent transfer or disposal of this without any consideration, it will not be deemed as supply. Or in some cases, what will happen is there will be business asset on which ITC is available, on which ITC is blocked, but you did not avail it. You voluntarily have chosen not to avail that input tax credit. If that business asset is also getting permanently transferred or disposed of without consideration, then also it will not be deemed as supply. So that's why 2 essential conditions. Number 1, there should be permanent transfer or disposal of a business asset, and ITC should have been availed on it. So if the ITC is blocked on that asset or ITC is available on that asset, but the recipient has not availed it, in those cases, even though there is, in those cases, if there is a permanent transfer or disposal happening even without consideration, then it will not be deemed as supply. Very, very important point. So these 2 points are very important here. So as you could see, permanent transfer or disposal of a business asset without consideration will not qualify as supply under this provision when business assets on which ITC is blocked or ITC is not available, or business assets eligible but ITC has not been availed. Next, second case, second para number 2 of schedule 1, which says that supply of goods or services or both between related persons or distinct persons as specified in section number 25 will qualify as supply even if made without consideration, if made in the course or furtherance of the business. So very important thing here, if there is any supply of the goods or services, both they are saying either supply of the goods is happening or supply of the services is happening. Between whom? Between related persons. Between whom that supply of the goods or services is happening, either between two persons who are related persons, or they are distinct persons as per section number 25, then that activity, even if done without consideration, if made in the course or furtherance of the business, that will qualify as supply. So now we need to remember, we need to recollect who will fall under related person definition, who will fall under distinct person definition. First, I will try to address the distinct persons as per section number 25. Say for example, there is one business person, there is one registered person. He is having a place of business in, say for example, in Karnataka. He is running one place of business. He is having one office. He is having a place of business in Karnataka, for which he has taken a registration with the Karnataka government. Now he also is having an office in Chennai. He is also having an office in Chennai. Now, can he run that office in Chennai under same PAN, under single registration which has already taken with the Karnataka government? The answer is no. If you have place of business in multiple states, in each state you are required to get yourself registered. So he is having a place of business in Karnataka, for which he will obtain the registration with the Karnataka government. For place of business which is there in Chennai, he has to get separate registration with the Tamil Nadu state government. Compulsorily he has to get registration. But both the registrations will be treated under same PAN. Both the registrations will be under the same PAN number. Now both these places of business will be treated as distinct persons if any supply of the goods is happening, supply of the goods or services happening between this Karnataka office and Chennai office of the same person, for which two registrations are obtained, even without consideration, still it will be deemed as supply, and on that you might be required to pay the GST. Understood? So if you have multiple registrations under same PAN, either in two different states or even within the same state also, you can have multiple registrations under same PAN. Sir, what do you mean by this? Take for example Karnataka. There is one person. He is having an office in Bangalore. He is having his shop in Bangalore. So he has taken registration for this. Now he wants to have one more office in Bangalore, or say for example he wants to have one more office in Mysore. If he wants, he can even run that Mysore shop also under same registration. But if he wants a separate registration for Mysore location, he can also get separate registration. Not compulsion. But if he wants to get a separate registration for his Mysore shop separately, still the government will give it. Both the places of business are in same state, but if you have taken multiple registration, you both will be treated as a distinct persons. If any supply is happening between you without any consideration, still it will be deemed as supply. So multiple registrations under same PAN, either within the same state or in a different state, will be deemed as distinct persons, and any supply of goods or services between them without consideration will be deemed as supply. And also there is one more concept called establishments of distinct person. Say for example, there is one person, he is having in Bangalore, he is having a business. Say for example, he is into business of selling electronic goods in Bangalore, for which he has taken the registration. With the Karnataka government. Now in Chennai, he is running a petrol pump. Whereby he is running that 5 products which are outside of the GST purview for now. Like that aviation turbine fuel, high-speed diesel, motor spirit. We have that 5 petroleum products, no petroleum crude and all. So he is running a petrol pump in Chennai, in which he is supplying that 5 petroleum products which are outside of the GST purview. So for this unit in Chennai, he will not take any registration. Why? Because he is not making any taxable supply. It is a non-taxable supply. So he will not take any registration. But still, these two entities will be treated as establishments of distinct persons. If any supply of the goods or services are happening between them, even without consideration, still it will be deemed as supply. Able to understand everybody? So that is what the meaning of distinct person. Now we should also recollect what is the meaning of the related person. Related person definition is very important. When two persons will be considered related, here they have given different scenarios. They did not give the freedom to you to choose who is your related person, who is not your related person. Instead, the act has told these persons we will consider it as related. Whether you like it or not like it, you will be considered related, and any supply of the goods or services between you without consideration still will be deemed as supply. So who will be considered related? As you could see the list here, such persons are officers or directors of one other's business, if they are legally recognized partners, if there are employee and employer, or a third person controls or holds greater than or equal to 25% of the voting stock or shares of both of them, or one of them controls the other, or a third person controls both of them, or such persons together control a third person, or such members are of the same family, or one of them is a sole agent, sole distributor, or sole concessionaire. See, all this is fine, but most of the students will do the mistake in family. Who will fall under the family definition? This is very, very important. Now, who will fall under family definition is spouse and children. Spouse and children. Whether they are dependent on you, not dependent on you, doesn't matter. Spouse and children will always be considered as members of the family, and they will always be considered a related person. Whereas parents, grandparents, brothers and sisters of the person, only when they are wholly or mainly dependent, then only they become the part of the family. So very, very important here, guys. Spouse and children, whether they are dependent on you, not dependent on you, doesn't matter. They are always a part of the family, and they will be considered as related person. Whereas parents, grandparents, brothers, sisters, they will become your part of the family only when they are wholly dependent on you. See, sometimes they will say there is a brother-in-law who is wholly dependent on you. Will he be considered related? No, brother-in-law will not become a related person even though he is wholly dependent on me. Why? Because they told only parents, grandparents, brothers and sisters. If they are wholly dependent on me, then only they will be considered as related person. Able to understand everybody? So para number 2 of schedule 1, the second activity which will be deemed as supply even if done without consideration. What is that? Supply of goods or services, or both, between the related persons or between distinct persons under section number 25 will qualify as supply even if done without consideration, if done in the course or furtherance of the business. However, there is one exception here. Sir, employer and employee, they will be considered as related? Yes. If any gifts are given by employer to the employee, employer is giving a gift to the employee. Sir, when I say gift, there will not be any consideration, no. So when the employer is giving a gift to an employee, since they both are related person, and when there is no consideration, still it has to be treated as supply, right? But they have given an exception. If the amount of gift, if the value of the gift given by employer to the employee is up to 50,000 rupees per employee per year. For one employee, if the employer is giving a gift of only up to 50,000 rupees, then it will not be deemed as supply. However, if the employer has given a gift more than 50,000 rupees to the employee, then entire gift value will be deemed as supply. Say for example, there is one employer who is giving an iPhone as a gift to his employee, which is 60,000 rupees. Will it be deemed as supply? Yes. Of what value? Entire 60,000 rupees. Not that excess over 50,000. Entire value of the supply will, entire value of the gift will be treated as supply. So this is also one such important aspect. Gifts up to 50,000 rupees in value in a financial year by an employer to an employee shall not be treated as supply of goods or services or both. However, gifts of value more than 50,000 rupees made without consideration are supply and are subjected to GST when made in the course or furtherance of business. Clear, everyone? Next, para number 3 of schedule 1. See, para number 3 talks about supply of goods between principal and agent. See, and one more point of thing, one more main point of difference you have to remember here. Para number 2 talks only, para number 2 says supply of goods or services between related persons or distinct person. But para number 3 only talks about supply of the goods only. Supply of the goods only by a principal to his agent or by an agent to his principal. It doesn't talk about services. So what is covered under para number 3 of schedule 1? So they say that if any goods are supplied by a principal to his agent without any consideration, where the agent undertakes to make further supply then that activity will be considered as supply. If the supply, if any goods are getting supplied by the principal to his agent, and for that for which there is no consideration, still it will be deemed as supply. But however, only those agents here, which agents will get covered under para number 3 is those agents who are making the further supply and they're giving the invoice in their own name. Which kind of agents will get covered under para number 3? Those kind of agents who are making the further supply and giving the invoice in their name, not on behalf of the principal's name. So say for example, principal has sent goods to the agent. Now the agent will make a further supply to the ultimate customer. Invoice will be given. No, that invoice is getting given by the agent in his own name, not on the principal's name. Only those agents will get covered here. Able to understand? So supply of goods. So if we read the provision here, supply of goods by a principal to his agent without consideration, where the agent undertakes to supply such goods on behalf of the principal, is considered as supply. But however, as I have told, which agent will fall here? Which agent will fall here? See, if the agent issues the invoice for the further supply in their own name, so in the agent's name only invoice is given, not in the principal's name, then that agents will fall within the scope of para number 3. Not just that, whatever goods which are supplied by agent to the principal. I have told the case where the principal has supplied the goods to the agent. There might be the case where the agent supplies the goods to the principal. Say for example, there is one principal, he needs some plant and machinery. He don't know where to procure it. So there is one supplier who will actually supply that machinery. But principal don't know. So what he has done is he has appointed an agent. Now what this agent will do is, this agent will procure the goods on behalf of the principal. So from the ultimate supplier, he will buy the goods and this agent will supply the goods to the principal. Now here this agent is transferring the goods to the principal without any consideration. Still that activity will be deemed as supply. When the agent is supplying the goods to the principal without consideration, then also that activity will be deemed as supply. But here also, only those agents will get covered under this para number 3 who are giving the invoice on their own name. So here agent is selling the goods to the principal, no? So here the agent will give the invoice in his own name, not the supplier will give the invoice. Here agent himself will give the invoice in his own name. Only such agents will get covered under para number 3 of schedule 1. So understood everybody? So this is what para number 3 says: supply of the goods either from principal to the agent or supply of the goods from the agent to the principal without consideration. But one key point here, it will not talk about services. If any services are getting supplied between the principal and the agent without consideration, then it will not be deemed to be supply. And only those agents will get covered under para number 3 who are giving the invoice in their own name, not on behalf of others' name. If the agents are giving the invoice in their own name, only those agents will get covered here. Now, last activity, importation of services. If you are importing the services without a consideration, then also it will be deemed in supply. But there are two conditions. See, when it comes to importation of services, there are two clauses actually. One is section 7 subsection 1 clause B. Other one we have section 7 subsection 1 clause C, which is, and when I say 7 subsection 1 clause C, I am referring to para number 4 of schedule 1. Okay. So first, what does section 7 subsection 1 clause B says is, if you are importing the services for which there is a consideration, whether or not it is in the course or furtherance of the business. If you are importing the services and for that import of the services consideration is there, and whether you are importing that services in the course or furtherance of your business or for your personal purposes, it doesn't matter. Always it will be deemed as supply. Always it will be supply when there is an import of service for consideration. Now what will happen in case if the import of service is happening, that too without consideration? This is what covered by para number 4 of schedule 1. So if you are importing the services without consideration, and in case if you are receiving it from a related or distinct person in the course or furtherance of the business, then it will be deemed as supply. So two conditions here. If you are receiving the services without consideration, then two conditions must be fulfilled. You must be receiving it from either a related person or distinct person. So that means that you are having some related person outside of India. So from a related person, you are receiving the services and it should be in the course or furtherance of the business, then only it will be deemed as supply. However, if you are importing the services without any consideration, either you are not receiving it from a related person or you are not, or it is not in the course or furtherance of the business, then it will not be deemed as supply. Able to understand? So what you need to check is, if any question has been given talking about import of services, first we need to check, is it for a consideration? Is it for a consideration? If it is for a consideration, always supply. No need to check anything further. Whether in the course or furtherance of the business, not in the course or furtherance of the business, no need to check it. Always it will be deemed as supply as per section 7 subsection 1 clause B. Now, second case, if you came to know if it is without consideration, then you need to check, is it from a related person? Then you need to check, is it from a related person or your establishment of another entity? If it is from a related person, if the answer is no here, no, it is not getting received from a related person, it will not be supply. If the answer is yes, it is getting received from a related person, then we need to check, is it in the course or furtherance of the business? Is it in the course or furtherance of the business? If the answer is no here, which means you are importing the services without any consideration from a related person only, but not in the course or furtherance of the business. Once again, it is not supply. Yes, if for this also, if you got the answer as yes, without consideration from a related person and also in the course or furtherance of the business, then that activity will qualify as supply as per section 7 subsection 1 clause C. Why? Because it will get covered under para number 4 of schedule 1. Clear everyone? So if at all they ask any question regarding the import of the services, this is how you need to take a decision. If it is for consideration, always a supply. You need not check the business condition as per section 7 subsection 1 clause B. If it is without consideration, then you need to check for this compliance of both the condition. It should be from a related person and also it should be in the course or furtherance of the business. Understood? So these are the 4 activities which are mentioned under 4 paras mentioned in the schedule 1, where even if you are doing it without consideration, still it will be deemed as supply as per section 7 subsection 1 clause B. Clear? Sorry, clause C. So with this, we have completed one more topic, right? So schedule 1 deemed supply, this also we have successfully completed. Everyone comfortable with the discussion till here, right? So now coming to the next topic, which we will pick it up. So now we will go to the registration chapter. So in the registration chapter, not on the entire chapter, as you all are aware, registration is also a very bigger chapter, which contains multiple concepts. So from the registration chapter also, I would like to touch upon few aspects, like one is applicable threshold limit, very frequently tested question and most important concept. What is the applicable threshold limit? When which threshold will become applicable? That we will try to have a quick look. Then we will see quickly who are the persons who are liable for compulsory registration. That also will have a glance. And what is effective date of registration? This is one such aspect where I have seen a large number of MCQs. What will be the effective date of registration? And one more very relevant topic these days, which is getting tested, is revocation of cancellation of registration. If because of any reason your registration got cancelled, can you revoke that cancellation of registration? Yes, you can do it, but there is a time limit within which revocation of cancellation of registration should happen. What is the time limit within which you are required to submit an application, and for what duration it can be extended? So like these are a few important aspects from the registration chapter which are very frequently tested that I would like to cover now. Right. Okay, so this is charge of GST. So we'll go to registration. Right. So let us see now section number 22. So section number 22 talks about who are the persons liable for registration. And what section number 22 says is, every supplier of goods or services or both is required to obtain registration from the state or union territory from wherever he is making a taxable supply. He is required to get the registration in the state or union territory from wherever he is making a taxable supply. In every such a state and union territory from which he is making a taxable supply, he has to get the registration when his aggregate turnover exceeds the specified threshold limit. When his aggregate turnover exceeds the applicable threshold limit. So condition for registration is your aggregate turnover must exceed the applicable threshold limit. And in case if your aggregate turnover exceeds the applicable threshold limit, then you must obtain registration, and that registration you have to obtain in every state or union territory from wherever you are making a taxable supply. Now we need to know what will be included in the aggregate turnover. One more important concept here. What will be included in the aggregate turnover definition? When I say aggregate turnover, it includes the all taxable values, and exempt supplies also you have to add it. Exports of goods or services or both, even exports also will be included in the aggregate turnover, and it includes interstate supplies of persons having same PAN. So between the persons having same PAN, if any interstate supply happens, that also should be added, and it should be computed on all India basis, and this figure will be exclusive of central tax, state tax, exclusive of the taxes under GST Act. That means exclusive of tax figure you have to calculate this. So what and all will get included in the aggregate turnover? It includes a taxable supplies, exempt supplies, exports, and it includes interstate supplies between the persons having the same PAN, and it should be computed on all India basis. On overall India basis, you have to calculate the turnover, and this aggregate turnover figure excludes the tax component. Right. And while calculating this aggregate turnover, it includes the taxable. It includes the supplies made by taxable person, whether on his own account or on behalf of principals. If I am a person, if I have to calculate my aggregate turnover, I have to consider the turnover which I have done it on my own, and if I made any turnover on behalf of my principal, that also will be included in my aggregate turnover only. So now comes applicable threshold limit. Okay, by following the above formula, we will calculate the aggregate turnover. So now, what is the applicable threshold limit? This aggregate turnover I have to compare with my applicable threshold limit. So if my aggregate turnover exceeds the applicable threshold limit, then I become liable for registration. If my aggregate turnover is within the applicable threshold limit, then I am not required to obtain the registration. Now, how to determine that applicable threshold limit? So I will tell you one scenario. So that scenario will follow that order you have to follow. So first, you need to check when you have calculated your aggregate turnover, you need to check whether the person is making a taxable supply from MMNT. Whether the person is making a taxable supply, not exempt supplies, guys. I need to check whether the person is making a taxable supply from MMNT. Sir, what is MMNT? Manipur, Mizoram, Nagaland, Tripura. From any of these 4 states, is he making a taxable supply? If the answer is yes, he is making a taxable supply from any of these 4 special category states. Then whether he is making supply of goods, or he is making supply of services, or he is making supply of both, applicable threshold limit will be 10 lakhs. Applicable threshold limit will be 10 lakh. If your aggregate turnover exceeds 10 lakh rupees, then you will be required to obtain registration in every state or union territory from wherever you are making a taxable supply. So first thing, check whether he is making a taxable supply from MMNT. If no, I have calculated aggregate turnover, then I started checking, is he making a taxable supply from MMNT? I got the answer as no. No, he is not required. No, he is not making any taxable supply from MMNT. Then you need to check, is he making taxable supply from UP MATS? You need to check whether he is making a taxable supply from UP MATS. Sir, what is UP MATS? Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Sikkim, Telangana. So I need to check whether he is making any taxable supply from any of these 6 states. If the answer is yes, whether he is making supply of goods, or he is making supply of services, or he is making supply of the both, applicable threshold limit will be 20 lakh rupees. If your aggregate turnover exceeds this 20 lakh rupees, you become liable for registration in each state or union territory from wherever you are making a taxable supply. See, if the answer is no, sir, even I am not making taxable supply from MMNT, I am also not making any taxable supply from UP MATS. That means from any of these 4 special category states and this is 6 states, you are not making any taxable supply, then applicable threshold limit will be, if you are engaged in supply of the goods, exclusively engaged in supply of the goods, applicable threshold limit will be 40. If you are engaged in supply of services or supply of both, then applicable threshold limit will be 20. This is the last case. So this order you have to follow. Even in the exam also follow the same order. Once you have calculated your aggregate turnover, check whether the person is making taxable supply from MMNT. Answer is yes, applicable threshold limit will be 10. If the person is then we need to check whether person is making taxable supply from UP Mats, then the applicable threshold limit will be 20. If the answer is no, then in any other state, if the person is exclusively engaged in supply of the goods, then the applicable threshold limit will be 40. If he is engaged in supply of the goods, supply of services, or both, then the applicable threshold limit will be 20. But however, in these cases also, in some cases, this enhanced limit of 40 lakh rupees will not be applicable. In some cases, some exceptions are there. So let me put it this way. So generally, if you are not making any taxable supply from MMNT and UP Match, and if you are making exclusively supply of the goods, applicable threshold limit is 40. But I will say there are some exceptions. That means even though you are engaged in the exclusive supply of the goods, even though you are not making any taxable supply from MMNT or UP Mats, still you will be eligible for only applicable and you will be eligible for applicable threshold limit of 20 lakh rupees only, even if you are exclusively engaged in supply of the goods. Sir, what are that exceptions, sir? When I can't enjoy that enhanced limit of 40 lakh rupees, sir? So the list has been given here. So when that 40 lakh rupees of enhanced limit will not become applicable is, see here. So that enhanced limit of 40 lakh rupees will not become applicable, even though you are exclusively engaged in the supply of the goods, provided if you are a person who are required to take compulsory registration. If you are a person who is eligible, who is mandatorily required to take registration under section number 24, then these limits and all will not become applicable. You have to get yourself compulsorily registered. Or if you are engaged in making supplies, if you are engaged in making supply, when I say making supply, that could be manufacture, that could be trading, anything. So if you are engaged in making supplies, either you are manufacturing it or you are only trading it, any of these products, any of these 7 products, then also you can't enjoy that 40 lakh rupees of enhanced threshold limit. So that means if you are exclusively making supply of the goods, if you want to enjoy that enhanced threshold limit of 40 lakh rupees, you should not be making supply of this below 7 products. What are they? Ice cream and other edible ice, pan masala, all goods under chapter number 24, fly ash bricks, fly ash aggregates and fly ash blocks, bricks of fossil mills or siliceous earth, building bricks, earthen or roofing tiles. So these 7 products you should not make supplies if you want to enjoy the enhanced threshold limit of 40 lakh rupees. And also, persons engaged in making intra-state supplies. So this is anyhow, if you are making supply from this MMNT or UP Mats, then anyhow you will not become eligible for 40 lakh rupees. This we have already covered in our discussion. And if you are a person who are taking voluntary registration, if you are voluntarily coming forward and taking the registration, then also these limits and all will not become applicable. Why? Because even though you are not liable, you are voluntarily coming forward and taking the registration, no one will stop you. So if you want to take the voluntary registration, then also no limits and all will become applicable for you. Clear? Next. So this is what a brief of section number 22. And also, as I have told, you are required to take registration only wherever you are making a taxable supply. Sir, I am in one state, I am making only exempt supply, or I am making a non-taxable supply. Will I be required to take registration in that state? No. You are required to take registration only in that state or union territory from wherever you are making a taxable supply. From a state you are making a supply, but that is an exempt supply or non-taxable supply, then in that state you are not required to take any registration. Next. So now we will talk about section number 24. Section number 24 is a section which is talking about the compulsory registration. So basically section number 24 talks about those category of the persons who are required to undergo compulsory registration. When I say compulsory registration, here they will not check you what is your aggregate turnover, whether it is exceeding the applicable threshold limit or not. All that will not be checked. The moment you are falling under section number 24, you become compulsorily liable for registration irrespective of the aggregate turnover. So the list of persons are there who are required to take compulsory registration. Let us try to understand who are they. Starting with the first one, the person whoever is making any interstate taxable supply. So 24 subsection 1 has clearly told that if you are a person making a interstate supply, if you are a person making a interstate supply, then you become liable for compulsory registration. So initially they told if you are a business person, if you are making a supply from one state to another state, you become liable for compulsory registration. But later they have given relaxation. So initially what they told is if you are a person making only interstate supply of services, if you are making interstate supply, but if you are making interstate supply of services, not goods, then we will not make you liable for compulsory registration. You cannot, you are not required to undergo compulsory registration up to a turnover limit of 20 lakh rupees or 10 lakh rupees. 10 lakh rupees in the case of MMNT, in all other cases 20. So now, and even they give one more relaxation if you are a person making interstate supply of goods, but those goods are notified handmade products or notified handmade goods, then also you are not required to undergo compulsory registration up to a threshold limit of 20 lakh rupees or 10 lakh rupees. So initially they told if you are a person making interstate supply, you become liable for registration. Later they gave relaxation for those people who are making interstate supply of only services. Then also they gave relaxation if you are a person making interstate supply of the goods, but those goods are notified handmade products or notified handmade goods, then you are not required to obtain registration up to a threshold limit of 20 or 10 in case of MMNT. Then second category of the persons who are required to undergo compulsory registration is CTP. If you are a casual taxable person, you are required to undergo compulsory registration. But here also they have given one relaxation. What relaxation they have given is if you are a CTP but you are making interstate supply of notified handmade products or notified handmade goods, then also you need not undergo compulsory registration up to a threshold limit of 20 lakh rupees or 10 lakh rupees. So generally, a CTP is liable for compulsory registration, but they have identified this notified handmade products and notified handmade goods. If you are a CTP, but if you are making supply of notified handmade products or notified handmade goods, then you are not liable for compulsory registration up to a turnover limit of 10 or 20. Third category of the persons who are required to undergo compulsory registration, if you are a person who is required to pay tax under reverse charge mechanism on your inward supplies. Say you are a person, you are receiving some inward supplies and those inward supplies are liable under reverse charge mechanism, then irrespective of your turnover limit, since you have an obligation to discharge the tax liability under reverse charge mechanism, you are liable for compulsory registration. You are liable for compulsory registration. Now here they have given one relaxation. Say for example, there is one supplier, he is making different supplies, but all the supplies whatever he is making, everything is getting covered under reverse charge mechanism. He is not having any such supplies which are taxable under forward charge mechanism. All the supplies whatever he is making, everything is getting covered under reverse charge mechanism where the recipients are discharging the tax liability. There is not even a single supply where you are required to collect the GST and pay to the government under forward charge mechanism, then this supplier is also exempted. Supplier, they have given an exemption. Next category of the persons who are required to undergo compulsory registration is NRTP. So in case of NRTP, without any exceptions, you become liable for compulsory registration. Now talking about e-commerce operator. See, e-commerce operators are also required to undergo registration. They have identified two kinds of e-commerce operator. Those e-commerce operator who are required to collect a TCS under section number 52, and those e-commerce operator who are required to pay the tax for supplies notified under 9 subsection 5. So these two e-commerce operators are required to be mandatorily registered. Those e-commerce operators who are required to collect TCS under section number 52 and those e-commerce operators who are required to pay the tax under 9 subsection 5, they are required to undergo compulsory registration. And not just that, there is an e-commerce operator who is required to collect TCS under section number 52, right? If there is any supplier of goods or services who is making the supplies through this e-commerce operator who is required to collect TCS under section number 52, even this supplier of the goods or services is also required to undergo compulsory registration, except those suppliers who are making supplies notified under 9 subsection 5. So other than supplies notified under 9 subsection 5, if any other supplier of the goods or services is making supply through e-commerce operator who is required to collect TCS under section number 52, this e-commerce operator anyhow he will take compulsory registration, but even these suppliers are also required to undergo compulsory registration. Initially they told it, but later they have given relaxation. So what relaxation they have given is if you are a supplier making supply of services through the e-commerce operator, then you are not liable for compulsory registration. You can enjoy a threshold limit up to 20 lakh rupees or 10 lakh rupees. And later they have also given relaxation to if you are a person making supply of the goods and you are making only intrastate supplies through the e-commerce operator, not interstate. If you are making only intrastate supply of the goods through the e-commerce operator, then you are also not required to undergo compulsory registration up to a threshold limit of 20 or 10 lakh rupees. So like this, e-commerce operator and related exceptions also we have seen. Then there are certain category of the persons who are required to undergo compulsory registration, might be important for MCQs. So if I take you through the list quickly, those people who are required to deduct a TDS under section number 51, and also who are if you are an agent on behalf of a principal who is a taxable person, and the goods or services which are providing on behalf of the taxable person are also taxable, then that agent is also required to undergo compulsory registration. So two conditions here: if you are an agent and your principal on whose behalf you are acting as an agent, he is a taxable person, and on behalf of that principal, whatever goods or services you are providing, they should be taxable. So two conditions, guys: if you are an agent on behalf of a principal who is a taxable person, and the supply whatever you are making on behalf of your principal, that supply should be a taxable supply. If both the conditions are satisfied, even this agent is also required to undergo compulsory registration. So that is what this point number 7. Then the person whoever is providing OIDR services from a place outside India, compulsory registration. Input service distributor, compulsory registration. Every person supplying online money gaming from a place outside India, compulsory registration. And any other class of persons as may be notified. Then talking about section number 23, in the section number 23, I want to highlight on one single point where they have given relaxation to one such person, irrespective of his threshold limit, he need not obtain the registration. Sir, who is that lucky person, irrespective of his turnover, whether he makes 20 crores, 100 crores, lakhs, he is not required to undergo any registration. Sir, who is that person? That person is agriculturist. So an agriculturist, to the extent of supply of produce out of cultivation of land, to the extent you are making a supply out of produce of cultivation from land, such agriculturist is not required to undergo registration irrespective of the turnover. Sir, but who is an agriculturist? Agriculturist means only individual or HUF. So the act is considering only individual or HUF as an agriculturist, and an individual or HUF either by their own labor or by their family labor, or by servants or wages payable in cash or kind by hired labor, whoever is doing that cultivation, they only will be qualified as agriculturist. And one more thing you have to remember here, say for example there is an agriculturist, he is making supply from agricultural produce, from cultivation of land, whatever produce he is making, that he is making a supply. Along with that, if he is also making any non-agricultural produce, then the exemption will not become applicable. In that case, if his aggregate turnover exceeds the applicable threshold limit, he becomes liable for registration. If you are an agriculturist and if you are not making any other supply apart from only produce from cultivation of land, then only you are exempted from registration, along with supply of production from cultivation of land. If you are making any other supply, like in one case they might say there is an agriculturist, he is making supply of agricultural produce, also he is supplying rice. Rice is not an agricultural produce. Why? Because it is after doing the processing. So in that case, exemption he can't enjoy, since he is not just making supply of produce out of cultivation of land, he is also supplying rice. He will become liable for registration if his aggregate turnover exceeds the applicable threshold limit. Clear everyone? Able to understand? So this is what section number 23, one point I have to highlight. Now coming to the procedural formalities, I want to explain one such procedural formality. What is the effective date of registration? On this aspect, I am seeing many questions. So I will try to explain what is the effective date of registration. So what will be effective date of registration? See, generally, other than CTP or NRTP, the moment you become liable for registration, within 30 days, you have to submit an application. So if you are liable for registration, if you make an application within 30 days, after you make an application, at some point of time, you will get the registration certificate. In that case, your registration will be effective retrospectively. If I give you one example, say you become liable for registration on 1st of January. So within 30 days, say for example, on 25th of January only you submitted the application for registration. But after all the procedural formalities, your registration certificate was granted on 5th of February. So even though your registration certificate was granted on 5th of February, it will be deemed as if your registration will be effective from the date you become liable for registration. Why? Because you submitted the application within 30 days, 21st of January, sorry. So since you submitted the application within 30 days, your registration will be effective retrospectively. On the other hand, let me give you another case. You become liable for registration on 1st of January, but you submitted the application on 5th of February. After 30 days, you become liable for registration. And you got the registration certificate on 10th of February. Since you did not submit the application within 30 days, your registration will be effective from 10th of February only. Here there will be no retrospective effective date. Your registration will be effective only from 10th of February. Understood? Clear and comfortable, everybody? So this is one aspect I wanted to highlight it here. Next, one more most common thing which I'm seeing it in the examination: revocation of cancellation. So in case if your registration has been cancelled by the proper officer on suo motu basis, you did not submit the application for registration. If your registration has been cancelled by the proper officer on suo motu basis, then you will be given an opportunity to make an application asking for revocation of cancellation. That means you can make a request for getting back your registration if your registration has been cancelled by the proper officer on suo motu basis. But what is the time limit within which I can make the application? So that is one such area which is important. So a registered person whose registration has been cancelled suo motu by the proper officer may apply for revocation within how much time? Within 90 days from the date of service of the cancellation order. You will get the cancellation order from the date of service of that cancellation order, from the date of receiving that cancellation order. Within 90 days, if you want your registration back, you can submit an application. But however, if you have a valid reason, so your registration got cancelled, 90 days is also over, but you are unable to submit that application for registration. If you have valid reasons, you can make an application to the commissioner, either commissioner or an authorized officer, not below the rank of additional or joint commissioner. They can extend that duration by extra 180 days. So without any extra permission, you get 90 days for making an application for cancellation, for revocation of cancellation of registration. However, if you have a valid reason, you can make an application to the commissioner. They will extend that time by 180 days. You will get extra 180 days within which you can submit that application for revocation of cancellation. But here they say this will be subject to Rule 10B. That means you should have done your Aadhaar authentication to be eligible to make an application for revocation of cancellation. So Aadhaar authentication, you have to get it done. So then you become eligible for submitting an application for revocation of cancellation. Clear? So with this, I have thought of covering these content in the registration chapter, which we have successfully done it. So now the next one more last concept from the returns chapter, I want to cover one small portion. GSTR 1A I want to cover. GSTR 1A I want to cover. I don't know why, but I have a gut feeling that they might ask a question from this. So that's why I'm revising this part. So GSTR 1A, what is this? See, when it comes to GST, when it comes to GST returns, there are three returns which are very important. We are required to be concerned with three returns. One is GSTR 1, then we have GSTR 2B, and then we have GSTR 3B. So GSTR 1 is a document which contains outward supplies, details of your outward supplies. Whereas GSTR 2B, we have GSTR 2B, which is not actually a return which is required to be submitted, which is not actually a return which is required to be submitted, but it is an auto-populated statement. What do we call it? It is an auto-populated statement which will show the details of your eligible input tax credit. How much amount of input tax credit will be eligible for you for that particular month. So that details will be shown in the GSTR 2B. Then we have GSTR 3B. This is a return where you will declare what is your output tax liability, where you will claim what is your input tax credit, whatever GST that has been reflected in 2B, that amount you will claim, and you will offset it. If any excess amount you are required to pay, that amount you will pay it in the form of cash. That is what GSTR 3B is. Clear? So now generally what will happen is, say for example, for the month of April 2025, for the month of April, I have done the business. So from doing that business, I made some sales, I made some purchases, all that written submission I have to do. So now what I will do is, generally once the April months get over, say for example, on May 11th, I have filed my GSTR 1, in which I have declared all my outward supplies. So I am a supplier, whatever outward supplies I have made, that I will declare in the GSTR 1. Then there will be GSTR 2B. In that GSTR 2B, what amount of ITC I am eligible for the month of April, that amount will be reflected in the GSTR 2B. Then I will file GSTR 3B. In the GSTR 3B, I will say, as per my GSTR 1, this much is my output tax liability, and as per GSTR 2B, this much is my input tax credit. I will do the adjustment, and if any extra amount is required to be paid, that amount I will pay it through my GSTR 3B. Okay. So now what government has done is, once you have filed your GSTR 1, after you have filed your GSTR 1, say for example, I filed my GSTR 1 on May 11. So from the date you file your GSTR 1 till the time you file the GSTR 3B, they will enable for you one more return called GSTR 1A. After you have filed your GSTR 1, till the time you file your GSTR 3B, they have enabled one more return for you. So what is that return which has been enabled? GSTR 1A. Sir, what is the purpose of the GSTR 1A? See, what is the purpose of GSTR 1A? 1A is, say for our example, on 11th of May, I have filed GSTR 1. I have declared my outward supplies. Say for example, I declared my outward supplies as 10 lakh rupees. After filing GSTR 1, I have realized that I have made a mistake. I have made a mistake in my GSTR 1. Might be I did not report an invoice. One invoice I did not report, I forgot. Or I mentioned wrong details. Like for example, I mentioned wrong invoice number. I mentioned wrong invoice date. or I mentioned some wrong amount, whatever it is. I filed my GSTR1, but I realized that I have made a mistake in the month of April. For the month of April written, whatever I have filed already, in that I have made a mistake. But I did not file my GSTR3B yet. So now what they have done is, in case if you want to rectify this error, you can file GSTR1A. So say for example, I filed my GSTR1 10 lakh rupees, but I forgot to add one more invoice that I will add it in my GSTR1A. So now this information, GSTR3B of the April month will capture the data from GSTR1 plus GSTR1A. So GSTR3B, I have to declare my outward supplies now. So in that return, this return will automatically capture my data in the GSTR1 and GSTR1A also. Both data will be captured. So my outward supplies will be 11 lakhs. My GST output tax liability is this much. My input tax credit as reflected in my GSTR2B will be determined. Balance amount, I can file the return. So GSTR1A is the mechanism through which I can update my, through which I can rectify or I can amend my GSTR1 of the current month. Able to understand? So my GSTR1 and GSTR1A both put together will be reflected in my current month's GSTR3B only. Clear? And one more point I would like to explain it here. See, generally, whatever data that you reflect in GSTR1, that will be reflected in the recipient's GSTR2B, right? That will be reflected in the recipient's GSTR2B. Say, for example, I filed my GSTR1 on May 11th. That data will be reflected in the recipient's GSTR2B for the month of April only. For April month, whatever GSTR2B is there, that will get reflected. But whatever data I have submitted in the GSTR1A, that will get reflected in GSTR2B of the subsequent months. GSTR1 data will be reflected in GSTR2B of the current month only, but whatever data I am amending through GSTR1A, that will be reflected in GSTR2B of the succeeding month. That means for the next month, like I am amending the April month related data, right? So this April month data will not be reflected in the GSTR2B of the current month. It will be reflected in the next month GSTR2B. Able to understand, everybody? And one more point I would like to explain it here. See, through GSTR1A, you can make all the changes, like you can add the invoice, you can change the amount, you can change the invoice number, you can change the invoice date, all that you can do. But one thing is not permitted through GSTR1A. What rectification you can't do it? Recipient's GSTIN you can't change. You can't change you can't make modifications to the recipient's GSTIN through GSTR1A. If you want to modify the recipient's GSTIN details, that you can do it only by way of next month's GSTR1. Through GSTR1A, you can't rectify the recipient's GST identification number details. All other changes you can do it. So this is what GSTR1A is about. I thought of covering this one small aspect from the GSTR1A also. Yeah. So with this, we have completed whatever topics I thought of covering. Yes, I have covered it in an excellent manner. I have done it, right? So hope this video will help you in your preparation. This will help you in fetching more marks in your GST paper. See you once again, my dear students. All the very best. Take care. I wish and hope a great success in your examination. Bye. Take care.